All right. Yo, what's going on, family? Let me know if you guys could hear me. Drop your locations in the chat. You guys already know I did the whole introduction on mute, you know, getting the week started off right. You feel me? But let me get those locations in the chat. Let me know how you guys were feeling this past weekend. Hopefully it was great. Mine was good. I spent it doing a little bit of education for myself and getting some stuff ready. Yeah, see, there's those locations. I knew there was something off. Hopefully you guys were able to hear the music. I was definitely vibing. I don't know about y'all, but that's probably gonna be my go-to start to the streams from now on. But yeah, hopefully you guys had a fantastic weekend. This is your boy Skag checking in on behalf of Profit Society. We're here for the Sunday market prep call. As you guys know, we'll be going over some fundamentals as well as some of our favorite chart setups for the week. I do have Abel and Ray with me tonight, as well as Kyle here in a few minutes probably. But let me see who's tuning in. Let me see who's with me tonight. Let's see. Let's go all the way back to the beginning of the chat. I see y'all been busy. Let's see. That boy Alex was first and foremost, first person on the stream. Shout out to you, my guy. Good to see you. Glad we got you settled in the Discord as well. It's good to see you on the inside, even though you've been with us for the whole month here. Tyson, what's going on? Jasper, we got Jerry, James, Tony. Got that boy Abel in the chat as well. We got Mike. We got Chaos Cray. What's going on, bro? Good to see you on here. Cozy, my man. Love you, bro. Appreciate you tuning in. Michael, what's going on, bro? Let me see. Let me drop down all the locations real quick because there's a lot of you guys that were just talking in there. Let me see where we're tuning in from. We got Miami. We got Tampa. We got Australia. We got New Mexico, Orlando. We got Tampa. We got like almost every city in Florida, huh? Shout out to the whole Florida squad. We got Albuquerque, New Mexico. We got New York City, Bahamas, Alberta, Canada. Excuse me, I can't even speak right now. We got McCall. We got New Jersey, North Carolina, and Georgia. Okay, boy said I'm worldwide. All right, shout out to you. We got what's that? Wisconsin, Alex? Is that where you at, bro? You out in the middle of nowhere? Music was lit? Yeah, nah, I feel y'all. You know, I know some people may not like the house and techno, but you know if I'm hosting the call, that's what you gonna get. Another silent skag. 20 Pip Savage, what's going on, bro? We got LA in the house. More LA in the house. Let's see. Yeah, smash that like button, family, especially if you're here with us every week. We got Montreal. We got Nico in the chat. What's going on, Nico? Good to see you, bro. DMV. We got China. Oh, we got China tuning in? Let's go. I like it. That might be the first time I've seen China on the call, if I gotta be honest. So shout out to you. We got Houston in the house. What's that? Georgia / BAH? Is that the Bahamas? I'm gonna assume that's the Bahamas. Glamorous Princess, what's going on? Good to see you on the call. Eric, what's going on? This guy's over here trolling Cozy already. We got Alabama in the house. What's good? But yeah, family, listen, it's good to be here with y'all. Abel, Ray, you want to say what's good to the stream? Let them know how you guys feeling, right? Let me know you guys can hear me loud and clear and that you guys are good on your side as well.
What's going down, family? Hope y'all ready for another phenomenal week. I want y'all to drop some 777s in the chat. If you're ready to win and not pretend, if you want the sauce and not be lost, if you're ready to catch some pips, man, I'm super excited, man, to have another week with y'all. Last week was a little slow for me, so I'm definitely looking forward to, getting some pairs this week. All my pairs had some time to retrace, had some time to, reach some points of interest that I'm interested in. So I'm excited, man. I don't know about y'all, but let's go ahead and get it.
Yes, sir. Yeah, last week was a little iffy in terms of actual price movements. We'll take a look at that in a second. Let's jump into, I think Abel's a little busy right now, but we're going to jump right into some of the fundamental stuff. Appreciate y'all for dropping them sevens. Love that you guys are ready for the week as well. Let's take a look at the fundamental calendar, family. Let's see what we got on the docket. So let's switch this over real quick and let's take a look. So for those of you that don't know, tomorrow is a day off, right? We all get to chill, have a nice little Monday off. Maybe prep for your Tuesdays for the rest of your week. But yeah, we do have President's Day here in the U.S. Canada's got Family Day, as they call it, whatever that may be. But shout out to Canada during their Family Day. Brazil's got whatever carnival may be. Again, few banks closed, right? So don't not expecting too much out of Monday. Nothing really on the news schedule. There is some RBA meeting minutes for that Reserve Bank of Australia there. That is probably going to be the most action you're going to see, and that's going to be a little bit later in the day anyway. Going into Tuesday, we do have some PMI data coming out for Euro and the pound area. We also have CPI numbers coming out for Canada, so a lot of that pent-up Monday volume will definitely get released on Tuesday. We also have some soft data revolving around home sales and some additional PMI numbers for the USD. Not too concerned with those, but people that are looking at some home sales numbers that will be on Tuesday. Further into Tuesday, we do have interest rate decision for the Reserve Bank of New Zealand, expecting to do a 50 basis point hike up to the 4.75, as well as their monetary policy. For me, it would be more about this monetary policy, see maybe what their thoughts of going down to 25 basis point hikes would be. And if they remain at this 50, or if they have some plans to adjust that, again, as they get up to some of the other central bank rates here, like the Feds or the Bank of England, Bank of Canada, right? Are they going to, let off the gas a little bit more? So that's what I would be most interested in on Tuesday from New Zealand, specifically from their monetary policy statements, to see if there's going to be any slow coming in this rate. I wouldn't be really worried about this rate result specifically on a personal level. You may take that into more account though. On Wednesday, again, some more CPI numbers out of the Eurozone, kind of catching up with some of the data that the Fed has recently released, or that's released on the U.S. side. We do have FOMC meeting minutes on Wednesday, so that should be very interesting. See if there's any sort of insight here into what the Fed wants to do going forward. So this will be at 2 p.m. Wednesday. FOMC meeting minutes can sometimes be a hit or miss in terms of volatility. We will update you guys in the Discord and the Telegram on whether or not we'll be live for this. Sometimes I do like to look at this live with you guys and just read through the data and see if there's anything worth noting. Currently don't have plans to go live for that, but we'll keep you guys updated in the Discord and Telegram. I don't think there was anything else on Wednesday. Was there? No, not that I see. Okay, so on Thursday, we are looking at, again, CPI at the Eurozone. Going to be very important data. Looking at it going from 8.5 forecasted to 8.6, but it is expecting to lean off on the month-to-month. Inflation still remains pretty high over there. Do we also have it for the pound? Is it coming in on Friday? Let me just, while we're on the topic of it, no, okay. So yeah, interested to see what this comes out as, right? Is this going to keep remaining high, or is there some sort of possibility that, maybe this has, peaked and potentially going on a plateau, which is what we would normally see before we start seeing some results to the downside. Now, I will say the bank, or the ECB specifically, still at 3% in terms of interest rates, so still kind of lagging behind the Fed, still kind of lagging behind Bank of England and stuff like that. They are still widely expected to continue 50 basis point hikes. The CPI will give us some insight onto whether or not we can maybe expect them to get more aggressive, although that's not something I'm specifically expecting yet. However, if this does not come out as a contraction and actually does come out with a positive number, and we exceed this 8.6 and for some reason creep back up towards 9%, I may assume that the ECB is going to want to remain pretty aggressive. But we are looking at somewhat sort of mixed data here, which is, again, also what we've gotten from the US in terms of CPI numbers. So, yeah, I will be having pretty strong eyes on this specifically for future Euro fundamentals. We do have GDP coming out also on Thursday from US data side. That will be something I'll also be taking a look at. This is also peak live trade room time. You guys know specifically on Thursday here, we're probably going to be live a little bit earlier because of this result. And if you guys are trading with us in the premium live trade room, this will be something we'll be taking a deeper look at on Thursday for sure. Friday looks pretty light. There is, again, some Eurozone GDP numbers, some more sales numbers, some members speaking. Mester specifically, I know. I think Abel and I were talking about this. He was letting me know the Twitter updates. I believe he's actually one of the people that's advocating for potential return back to 50 basis point hike. So it'll be interesting to see what he has to say, if I'm remembering that Fed member specifically correct. And then yeah, the rest of the week is pretty much a wrap after that. So few events we're looking at. Again, we have a bank holiday tomorrow, so make sure you guys take that day off. And with some of the release of these news events, expect some of the pent up volume from Monday to hit pretty hard. So yeah, let's pop over to charts. We'll take a look at that. Before we even do that, though, I do want to pop over back to the chat. Just make sure that there's no questions on any of the fundamental events that you guys may have, or taking a look at you still in EU for a buy. Yeah, I mean, me specifically, you gotta understand, I'm long from like 0.96, so there's virtually no reason for me to close my EU longs. So the answer to that is probably going to be yes for many months, if not, the entire year. So yeah, depending on what level you're talking about, I am overall still in that buy. Kyle, I see that you hopped on. Abel also, I don't know if you're still there, bro. But if you want to say what's up to the chat before we get into charts. But what's going on, bro? How was your weekend?
Yes, sir. What's going on, family? Hope you guys can hear me loud and clear. I had a really good weekend myself. Very productive weekend, and I finally got my computer back. So that's what I'm more excited for than anything, because last week it was extremely rough trying to trade on a MacBook once again, but I got everything situated. So I'm excited for this week, man. I really am. So I'm about to tear it up this week. I don't know about you guys, family. Family, go ahead and drop a 777 in the chat if you guys are excited for this week. If you guys plan on making this week an extremely productive week for sure, then go ahead and let us know in the chat by dropping those sevens, because we're definitely going to provide you guys with a lot of value on tonight's call. That can definitely go ahead and help you guys throughout this journey. And just one thing for me, family, one thing that I do want to ask you guys as a favor, go ahead and smash that like button, fam. We only got 30 likes. We got 80 plus people on. We want to go ahead and smash these likes just to help us out tremendously. These calls are free, and it takes literally half of a second just to smash that like button. And it actually does help us out tremendously, more than you guys might even know, family. So let's go ahead and get those likes up. Appreciate y'all. And yeah, I'm excited for this week for sure.
Yes, sir. Yes, sir. Now I'm hype. I'm definitely hype. At the end of the day, I feel like there's a lot of big moves that's been waiting to happen in the market that we didn't get last week. And, I'm not really forcing it, but I really feel like this week is going to make those moves that we've been anticipating.
Yeah, I feel you. Let's actually jump into some of that. So family, just a little bit like longer term updates on this. Again, it is a Sunday before a bank holiday, so I wouldn't expect us to be giving any specific, signals tonight. Maybe a few people do have things, but keeping in mind with that bank holiday tomorrow, a lot of what I'm going to be looking at is just giving you guys my personal updates on some of the longer term side of things. Because like Kyle just said, we are at very interesting parts in a few different pairs. So I'm going to go over gold here first, and if any of the boys have some thoughts specifically on gold, we'll hear those, and then I'll probably go over like 2 or 3 more things, and I'll really kind of let them lead the way in terms of what they're looking at, because a lot of my analysis is going to be the same direction. And as you guys know, right, I'm a dollar bear. There's nothing inside of me that wants to go anywhere near the bullish dollar side. And for me specifically on gold, I've been waiting for this liquidity here to kind of get taken on this wick fill, which I didn't think we were going to get after we initially kind of made this move over here. But we finally grabbed it, so beautiful. So we get another little hourglass, which is a pending liquidity area that I'm looking at, into a check mark, which means we've taken it, which means I can now trade away from this towards where my next hourglass would be. Now, the thing is, I don't really have any hourglasses to trade towards, with the exception of maybe the one all the way up here at, at the extreme highs. So just taking a look at some potential liquidity that I expect to get taken on the bearish dollar side this week is going to be around this 1870 level. Kind of just looking at this 4-hour here, we do have a little bit of, relative equal highs, whatever you want to call them. But for me, it's just unfilled wicks especially when you consider the fact that there's all the inefficiency that lives right above this. This is a very obvious hourglass area for me, or again, just an area of liquidity that I believe price will get attracted to fairly easily. So that's what I'll be looking for on gold. Now, obviously, again, with the bank holiday and stuff, if I was going to execute on this, I would want way better pricing. I wouldn't really be interested in chasing it here. Maybe you could have made the argument that, you know, I probably could have did something down here. But again, heading into the holiday, I'm going to just sit on my hands if it takes off without me. Again, I have my long-term swing, so I'm not really too concerned about it. But if I did want to trade this in the most logical spot for me, based off of some of these lower time frames, I gotta be honest, I kind of would want a full retracement of this move. The only thing that I really see, because I'm not a fan of playing inside of inefficiencies or imbalances or fair value gaps, I know some people are going to look at the 50% of this. You know, if you're a smart money concept trader, or if you're more of like just a kind of basic like fib trader or market structure trader, if you're looking, again, I mean, that's 50% of the entire move, which is just kind of funny. Or the 61.8, right? If you're looking in any of these areas, I just don't think ultimately they would hold, again, if we can even pull back that far. So for me, looking to play at the extremes, I would have to wait for some sort of like move back below here inside of the extreme liquidity pocket. I probably wouldn't want to play. I mean, I would probably be open to playing as high as right below here, but realistically, probably something inside of here. That's just where the best risk to reward would be for me. I would want to see, again, price test inside of here. It doesn't necessarily mean the second it comes in here, I'm going to execute, but I do want to monitor, or would want to monitor, what actually happens down at this level, right? I have no interest in really playing any sort of minor pullback here. To be honest, I think this move is mostly already going to kind of just leave without most people in frames. So yeah, that's the pocket of money I would want to play on specifically on gold. I do have my doubts about it even getting down there. Because again, like, it just looks like we grabbed such nice liquidity on the 4 hour. You get that little kind of low effort pullback, and this is probably going to just keep climbing up. But again, Sunday analysis, ideally, if I got what I wanted and I was the market maker and I could, you know, control price, that's what I would do. But I do think it's kind of far-fetched. Now, I do have some... Again, I'm more bullish on this than just the 1870. I do think that that's probably all we'll get about this week before we make a new cycle. But if you guys are trading gold to the bullish side, I would not exit just because we start to clear 1870. I would actually take the clear of 1870 as confirmation to continue to trade bullish. So ultimately, as you guys know, because I do have to put this out there just so everybody's aware, I am way more bullish on gold. Again, do I think it's going to be this smooth? We're going to get this week? No, it's incredibly unlikely. This is probably going to take weeks to happen. But I am looking at continuations now that we've taken this liquidity. So that's what I'm really looking at on gold. Abel, Ray, Kyle, you guys have any thoughts on this pair specifically? Anybody in agreement? Anybody in disagreement, maybe? Let's talk about it.
Yeah. I definitely agree on gold. That's actually a pair that I was just analyzing not even probably an hour ago, and I had a very similar sentiment on what it is that it's gonna do. I'm looking for the same thing. I'm looking for a retracement and a continuation. However, I know you're looking for that low to get cleared out. I would actually like to take the trade inside of that area. Hopefully it'll hold. But me just seeing,
Wait,
obviously I know you like to see those wick fills.
Just to be clear, what level are you talking about?
Because I'm looking at your screen right now. It's kind of tiny. Let me just check mine out real quick.
Yeah, give me like a price.
So,
because I'm looking at like 1822 or below, ideally.
Right. See, I'm looking at like 1825.5. So that's kind of where I'm looking at.
So testing, so testing, but not filling the wick.
I mean, it could fill it. I'm just letting you know where I would start looking for entries, if that makes sense.
Gotcha.
I mean, it could fill in that wick. It might even clear it. Typically, I don't look for a clear if I don't see any pockets of liquidity underneath the area that I'm clearing. So that's one of the reasons why I'm looking for it to hold. But I'll let you finish your analysis and I'll kind of pull mine up.
No, you can pull yours up. Go ahead. I mean, my analysis is
Okay,
done. That's what I'm looking at. So if you want to bring up your chart, please. More than welcome
okay,
to.
got you. So I'm not here to cause any confusion with anybody. If you guys want that lower entry, by all means, definitely take it. Skaggs, he trades the hell out of gold. Me, I take a look at gold every now and then. But I am looking for this particular area to hold. And typically, when I see an area react, make these lows react, and then sweep the area before going bullish, I typically look for that area to hold up. So and then considering that I don't really see any, if I am to clear this low out, I like to see something more attractive underneath it. And I do see how the market could react off of one of these areas, but this one's just a little more attractive to me. So I'll take a chance there. I do like what you see as well, though. So, I mean, I feel like this would probably be one of those trades that, I'll take half risk on and I may attempt it more than once, But essentially, I'm looking for this area to hold up. And I want to go bullish as well. We're both on the same page with the weak dollar. That's essentially what I've been looking for. We did clear this low. It's not a lot technically that I see outside of just us clearing this low and having a nice violent reaction. On top of that, we have so much price we could potentially fill in up here, and even here, if the market doesn't even want to come all the way up there, I think the market can at least come up to like the 1917 area, 1918. Let's just say 1920, just to give it a nice round number, right? I do think the market can at least come back to that area. So, I mean, we're looking at, God knows how many pips that is. I mean, it's a lot, right? So just with that.
Yeah, it's close to it's just under 1,000.
Right. So that's something that I definitely see. But again, I'm waiting for that opportunity to come to me. Something that I'm already in is the EU. I think you're in it also. And I'm glad you think gold is bullish, because that pretty much means that we're probably in alignment when it comes to EU, right? But just with that, I'm definitely bullish on EU. I got in, had a beautiful entry down in the lows.
Yeah,
Hopefully
I got an entry. I think right by yours are like 106.25 ish.
Okay, yeah,
Yeah,
beautiful.
I'm looking at the same thing. I think that's we finally got the spring on EU, which I'm happy about, because I was looking. I did take a few break evens and even like a small loss on this last week, because again I was trying to play it, because we did get a nice reaction off one of the liquidity pockets, which is more or less what I was trading. And I remember even saying about it in the live room that I'm like, yeah, this, like, if this works out, it's going to be a type 2, which I typically hate. And for those of you that don't know what a type 2 is, it just means a trading range that doesn't resolve itself with a spring or a stop hunt or a fake out or whatever your fancy word for it may be. But yeah, I'm looking at this, probably the like literal same thing you are. I mean, I won't be exiting at 110 if we get it, because you know me, I'll hold forever if I can. But yeah, bro, I like this was a beautiful analysis by you as well, and I think that we definitely have a nice trade on our hands.
Beautiful.
And this
beautiful.
also, this is, I mean, it's also EU that also makes me believe like gold might not come back, to be honest, because EU has a nice spring, and it, again, like I don't even think gold will come back. It's just like I wouldn't touch it unless it did at this point.
Yeah, and you definitely don't want a bad entry on gold. There's some pairs where you can just you look at the target and kind of, weigh the risk to the reward. But yeah, gold, you definitely don't want to get caught on the wrong side of that. But yeah, I do agree, with the spring. I'm not necessarily a Wyckoff trader, but I do catch a lot of springs just because I like to, identify whether lows are strong or not. And, once I saw these lows, I kind of had to ask myself, and this same question I always ask myself, will this low create, a 400 pip move? And I kind of like to look at the quality of the candles, and if the candles could kind of speak to me, would it be saying that they're strong enough to make that kind of move? So I definitely saw what you guys saw here. So I'm glad you guys was able to go break even with that move. But yeah, I was definitely waiting for a little bit lower because I also saw like this little hiccup in the market here. So I did want to see that get cleared out as well. So once we cleared that wick out, I was like, bet I'm buying. So
Yeah, I
I'm
also like
trying
the
to like
reaction off the what I call the inefficiency in there, right? It's like, because like for me again with those imbalances with the inefficiency that we kind of like, it has to kiss and go. So that's exactly what it did, right? It just tested into it a little bit, and then like now we're going. So
yeah.
yeah, these are definitely do or die from like right here. I will say if these lows that we made last week get taken out, I'm probably gonna end up sitting on my hands for a little bit, and I'll probably go look for like other stuff to trade, because it's either these are the lows, and we could trade away from them, or there's something more going on that I need to digest.
Yep. Yep. So yeah, that's that. So I'm in that, and I pretty much believe that GU will, follow suit. Obviously, all the correlating pairs I believe will follow suit. And I'm so mad I didn't take this. This was easier to identify than the EU, in my opinion. But
Yeah, it's a pretty classic
fortunately,
setup right there. Huh?
yeah, missed this entry for whatever reason. If it can retrace, I'm thinking I'll probably attempt it. It's not what I like. This is not like my textbook type of setup, but I'm just trying to find an opportunity for people that may not have taken it yet. Maybe you get something here, maybe you clear that out. If I was to trade this here, I'd probably do very light risk, because it has its pros and cons. It's not like my A+ type of setup. But if you can get some sort of retracement, on any one of these pairs, whether it's gold, EU, or GU, I'm thinking even another opportunity on EU somewhere in this area would be decent, once we actually clear out these lows here. So, you're clearing out something, but you're also respecting a low that appears to have a little strength behind it. So, those are pretty much the scenarios that I see playing out. And I don't want to kind of look at just too many pairs, but I'll be brief. Eurocad, this is a possibility. I don't really think it's gonna drop that low though, because this area of supply is not that strong to me. Although it does sweep, it doesn't sweep with a lot of velocity, if that makes sense. It doesn't sweep with a lot of strength. So I feel like this area will more than likely probably cause a little hesitation. I don't necessarily think that this area of supply will drop the market 170 pips, but if it does, it wouldn't be the first time I've seen something wild. I'm just giving you guys some possibilities here, because even if it doesn't go the distance, if you have a low risk opportunity where you can risk 20 pips or less, even if it drops, here, maybe 100 pips or so, 80 pips, it's still a decent return. So the market dropping way down to 1.425 is like a best case scenario. But regardless, I do think we'll get some sort of reaction out of this high, out of this supply zone. So I'm just waiting for these highs to be swept, because they appear to be weak in my opinion. So I just want to see these equal highs get liquidated first. Once we really clear, and we kind of clear a little bit, but I know what a real clear looks like. That's not like a real sweep of liquidity. So once we get a real sweep of liquidity and we pop up into this tiny area of supply, I will be looking for some shorting opportunities. We do have a hezzy, then we got our crossover there. So I'm looking for the market to come up, give us some possible reaction. I do like the fact that, you know, this area of price action is a lot more slow and choppy than this. So that does give me a little more confidence that, you know, this could potentially just be a retracement. And we could very well get a decent move down. So that's pretty much what I see on Eurocad, if anybody wants to take that. I was taking a look at this earlier. Probably a little too late to take action on that now, so I'm not even gonna waste your time with that. But yeah, that's pretty much about it for me, y'all. Y'all see my analysis on GU, EU, Eurocad. You know, I don't want to give y'all just a million pairs and just all at once. So, you know, just take what it is that, you know, you see. If anything sticks out to you, anything you agree with, I would definitely go ahead and execute. All right. So that's that. Oh, and USD CHF. All right. If we could retrace a bit, I will definitely take some shorts here. And that's crazy to even say because I don't even trade USD CHF, but it is reacting in specific areas that I like. You know, this high did take liquidity, then it made new lows. We took the weak highs that were internal of the range. So now I'm just looking for the order flow to continue with this time frame where we see supply being in control. So from here, again, if we do have dollar weakness, there is a possibility that we come back up to about around 923 if we want to be super round and specific, but or you know, if you want like a round number, 0.93, but a little more specific, I would say 9298, right? 9298, 9298. I feel like we'll get like a nice minimum of a 1 to 5, potentially a 1 to 15 type of setup. 1 to 5 minimum. Oh, excuse me. We could go a little further, right? 1 to 5 minimum. I feel like best case scenario would be like a 1 to 20 type trade. All right. So that's all I see. I did just want to move quick because I know we got other people. I'll let Kyle talk about USB CAD. I don't want to take all the pairs. So that's pretty much all I got, guys. But what else y'all looking at? What else y'all see in the markets?
Yeah, that's I mean, pretty in tune with what I'm looking at as well. I do know there were a few questions in chat just geared, I think, just generally to what we were speaking about here. Somebody asked me if I could break down that POI down a little bit. You mean my gold POI? So my gold POI really just comes from the fact that it's the extreme liquidity pocket, and for me, the way I define liquidity pocket is just if you're in a downtrend, it's just the lowest low to the new higher low, right? So if we're taking a look at gold, to be fair, we haven't really created a new higher high, but if we have our downtrend here, right, and this is our kind of new, let's assume there's a higher high, right? The most logical spot would be back kind of below, this and the low here. So the POI is just really the extreme liquidity pocket. I wouldn't play inside of anything else in here. There's none of the standard things I look for. There's no lone candle. There's no, there's just really nothing that I would typically be looking inside of, other than that. So it's like when I have no other POIs, the only POI that I have remaining is that liquidity pocket, unfortunately. Jude wants to know, do I think E will give us another entry on the test to the spring? So I get with the holiday, I just I mean, ideally you would want that, right? So you would want like some sort of retest again down, and that's like basically the same thing I'm looking at gold, right? It's some sort of retest down to the spring, right? You get your accumulation, you get your spring, you get your test, and then you can get the rest of your accumulation and breakout. Ideally we would, and ideally there's a few things you could look at. I mean, you could look at a retest just to the 1 hour OB that sits here, right? Because theoretically we should not break any lower than the climax low here, which again does have order block structure to it. But the question is like whether or not you think it's going to get that far. If it does, then you know the play, right? We take it, right? But me assuming that it's going to come down here is based off the way the week is set up. That's not what my expectation would be, right? My expectation would probably be that we just kind of keep the same stupid little low volume momentum as we clear some highs until we get to some of that U.S. news release data where, I mean, we have FOMC minutes, we also have GDP, and the likelihood is that like one of those releases come out and fuel some dollar strength, and we come back not immediately, but after a bunch of other price actions. So basically the idea is here is that you, before you come back down to the test, is like you actually reaccumulate, push higher, take some highs, and then you'll come back for the test later in the week, and then maybe we'll have to buy it end of week or maybe even into early next week. So I don't immediately expect it. Again, if it does give it to me, I'll take it. You know, that's not, again, like I'm not the market maker, so I can't control that. I can only play what I see being given to me. But yeah, typically you would expect it. It's just that the way the week is set up today with the way the week is set up this week with the bank holiday and everything, and then the news towards the end of the week, I feel like it would come back, if anything, at the end of the week. So my expectations about how that happens are just a little bit different. But you're right. Ideally, we would want to, you know, wait for that. Or if we had the spring entry, then we'd just have the spring entry. Exactly, yeah. See, most people want it to come back because, again, most people are not in the trade. So ideally, that is what you would want to see. But we may not get that right away. I didn't get that entry on EU. Yeah, it was. Hey, man, it was sent in the Discord. That boy Ray definitely sent it to you. When GJ die? Yeah, let's take a look at GJ. I guess that would be like the only other thing I really have to look at besides maybe Nasdaq. Again, still remaining patient. I have no reason to go short on this yet. Still looking for, you know, above 162.40. Once we push above 162.40, I'll be looking for every reason to go short. Again, I won't, this is not a sell limit that sits in the market. This is not the realistic stop loss that I'll be using. It'll probably be much tighter than that. But yeah, as soon as we clear some of these highs up here, I'll be looking for any sort of sign of exhaustion for me to actually begin to go short. So I'll take any sort of live OB that happens on any time frame that looks good. I mean, if it's supported by volume, I'm in there regardless. I don't care if it's a 5 minute, care if it's a 1 hour, 4 hour, however it develops. Once it develops, I'll be taking that trade. So still, I'm not touching this thing until we come up to this 162.40 or higher. I will say there are a lot of signs that are beginning to point me in the right direction of being confident to take the trade. One thing being this incredibly high buy volume here that really wasn't enough to kind of break anything. So lots of effort, little results, and then now as we continue to push higher, volume is just, again, remaining pretty high. It's not like it's incredibly low volume, but the result from that volume is diminishing. So it's like the buyers keep trying to bring it higher, and it just keeps kind of getting absorbed, which tells me that there is smart money, again, beginning to enter the market, beginning to take in all of the liquidity that they can. And it's just a matter of them kind of releasing that kind of final bit of supply here before we go tumbling down. So yeah, I'm still keeping my eyes on it. It's just, you know, it's we gotta remain patient. You know, I mean, we've been talking about this for a very long time now. I mean, it's been, you know, between a month or two. So we just gotta wait. Remember, you guys remember what it was like up here, right? Same thing, right? You see how long we had to wait, you know, on the daily time frame, right? Before we got that, you know, actual push up and the setup. And then even when it got up there, it still took a few days before it like actually gave us the spillover. So once we get that sweep, we could tell that the buyers are drying up. We're looking for literally what you see happening right here. We're looking for the same thing that's going to happen right here. Just another distribution cycle. So we're just going to wait for the pop, the collapse, and then we'll take that down. And again, depending on the data that we get above, we'll know pretty quickly whether we're going to be right or wrong. Because like Abel's point, I know he's going to want to talk about it. He's pretty bullish, and there are reasons to look bullish, but it all going to depend on what these buyers can do up here. But based off what I see, they show strength, but they're not showing much result. And when you don't have result, you gotta trade away from that. So yeah, we just gotta remain patient. That's what I see on GJ. If anybody else has any thoughts or charts they want to share on GJ, more than free. If not, I'll move on to NASDAQ. Let's just keep up with chat though, in case anybody has anything. EJ, GJ sells. Yeah, it's a matter of remaining patient. Just a matter of remaining patient. The weekend was long enough. Yeah, I feel you. The weekend got extended a little bit. It happens. TJ, what's going on? Good afternoon, bro. If volume doesn't push higher, that would be some divergence.
I mean, I got my thoughts and opinions on GJ for sure.
Yeah, I know. I was waiting for you to.
In fact, I actually got a buy setup that I'm actually looking to take us above to where you're looking at anyways, your hourglasses that I'm actually very
I know you got I know you sent a trade. You're still in that, right? Are you still in that? I know was it Friday you sent one to the
yeah, and that thing is let me just I'm still holding all the trades that I've been calling out for sure. At least
yeah, I know that was a pretty nice trade that you called. I definitely was in agreement with that.
Yeah. I'm only holding though about like 30% of the position left, but I'm definitely still in it for sure. So yeah, let me go ahead and take over the screen share, and you guys can go ahead and see what I'm looking at for GJ. And just like Skag said, guys, I'm definitely pretty much looking completely opposite from him. I know he's expecting GJ to really completely collapse all the way back down to these lows, where for me, I just don't see it just yet. I think we're actually going to go bullish. In fact, we actually do have a bet on this, which is why it's even more interesting now to see what this thing actually ends up doing. So yeah, let me just break down what I'm looking at, guys. And this is again a setup that I'm actually going to be looking at for myself to take. Whenever the market does get down to this key level over here at 160,800 is really where I'm going to be looking to see if I can get a potential entry to go long. And again, just keep in mind, guys, the reason why I'm so bullish on this, right, is just because I'm playing the fundamentals. I'm playing the differences in central bank policies. I'm playing a lot of more macroeconomic data. All right, like that's really what I'm relying on more than anything. And that's why I'm so bullish on this. And that's why I've been bullish on GJ for so long. For the past year and a half, I've been bullish on GJ just because of the differences in central bank policies and the fundamentals and all that good stuff, right? And I'm still bullish on it, right? There's nothing at all has changed my mind on the fact that the pound is going to continuously be just a lot more attractive than the Japanese yen, right? In terms of actually investing into the actual asset itself. And yeah, so I'm definitely still bullish, right? So what I'm looking at for, this up and coming week, guys, is a potential play here that I'm interested in. Let's just look at what structure has done so far. We obviously seen a very strong increase in buying demand here for the pound. We've seen a little short-term pullback in this little bit of a market, but then we also found a newfound demand as well, that also came and created new highs once again. Ever since then, we just been more so in more of a corrective phase, you could say. But what we seen last week is what really has me interested in this move higher. We were stuck in this range pretty much for the entire, that's not too long, right? But we were stuck in this range, guys, for about 2 days, right? And then we ended up sweeping the lows, which should be expected, capture liquidity. And now I expected the market to go ahead and run the highs, right? Which is exactly what we did. I ended up calling out a buy down here, so that we can go ahead and cash this entire move up. And we were able to cash that entire move up that was called out, for all of the premium members, right? So shout out to anybody that did decide to go ahead and take this position. But now moving forward with today, I would be interested in seeing this thing actually, giving us a little bit of a pullback back to the downside. But that's just to go ahead and get us back down into this newfound demand down here at these lows once again, which is actually pretty close to where our initial entries are when I called it last week. But that's just like the area that I think is going to be the most attractive for me to look for re-entries, because I'm really not interested in anything over here to look for some long positions, like at all. And what I'm talking about is like all of this price action right here, guys. Like It's super choppy. I mean, obviously we are seeing a lot of buying demand here, but I would actually like to go ahead and target below all of this little bit of buying demand that actually started to come into the market after we finally did pop up. So my play going into this week, if we're able to go ahead and see price pull back down, probably below this 160.7 level, I will be very interested in going ahead and seeing if we can go ahead and catch some longs to then go ahead and start targeting, this high right here at 160. We could just call it 162 round level, even to target this 162 200. And then eventually to go ahead and break, these highs right here, right? There's just a ton of liquidity positioned above this entire range, right? And just to Skag's point, there's liquidity as well, even at the bottom, right? There's a ton of liquidity, at the highs and the lows of this market. We've been stuck in this range for the past 2 months now, right? So there's liquidity all up here, all down here, right? So I could see why, the sell is attractive to certain people. But for me, I just don't think we're going to go ahead and target that just yet. Now, I could be completely wrong. And if I'm wrong, it is what it is, right? That's why we use proper risk management, just so that we are able to trade another day in case we are on the wrong side of the market. But overall, I really do like this potential play here. So I'm going to be personal. Again, this could be just me, but I'm targeting obviously back up to the 162 400. But I'm really going to see if we can try to target even higher. All right. Now, again, this goes against what other people think, and that's, completely fine. It is what it is. There's different perspectives in the market. People analyze the market completely different ways, and that's completely fine. There's nothing wrong with that whatsoever. But what I would like to see is, I would love to see if we can come up and fill a lot of this, inefficient price action, imbalances, whatever the hell you want to call it, fair value gaps. I really don't care about the terminology. Right. But I would love to start to go ahead and fill a lot of this fast moving price action, right, to the upside. Right. So I think it looks good. That's definitely what I'm going to be targeting personally. And I'm interested to see what the hell happens with this, though. Either way, I'm going to be, managing my risk correctly regardless. Right. So if I'm right, amazing. If I'm wrong, amazing. Right. I manage my risk, away for a specific reason. That's the name of the game here, guys, as traders, right? We are professional money managers, right? Like, we're technically traders, but we're really just professional money managers, right? If you're able to manage your funds correctly, then you're going to be here in the long run, right? You're going to be here for the long term, so that's why for me, I don't care about being wrong, because I'm managing money correctly, right? Just like I don't even really care about being right. It is what it is. All our job as traders is to find the setups that follow our rules, take the trade, and deal with the outcome, no matter what the outcome actually ends up being, right? So I like it. If I'm by myself on it, even better, right? I really don't like being with everybody as well. So I'm actually excited for this. And this is definitely going to be one interesting area or setup that I'm personally going to be, looking to take advantage of for sure, right? Seeing if I can get a nice little play here off of this internal level of demand, once we did react off of this lower demand down here, right? So that's my thoughts, my opinions on GJ. Now, let me go ahead and see what you guys are talking about in the chat. Let's see. I'm in a buy for GJ too. I'm in with you on that, Abel. I didn't buy GJ or EU or Friday because I was focused. Shout out to that boy Wally too. Personally taking my own trades, but I was in green with both bangers. Give me that setup there. Yeah. Let's see exactly what I'm looking at for GJ. Now you're pushing. I mean, Wally, go ahead and drop your markup in the chat too, my brother. You're somebody that, again, has definitely proven that you've been putting in a lot of work, bro. So, whatever it is that you think as well, by all means, we'll definitely be.
Just for the record,
more than
Wally
willing
is,
to go ahead and
Wally
look
is
at it.
hashtag Team Skag.
And Wally's also going to be hashtag disappointed when we get up to 175.
Oh, Wally, don't let him disrespect us like that, bro.
I mean, it is what it is, man. It is what it is. Big disappointment. You guys are going to be hashtag Team L, hashtag Team in debt,
Hashtag team case study
losers.
for you.
You guys are going to be hashtag team. Yeah, you guys know where we're getting at with this, right? But yeah, so that's where I'm looking at personally.
Is that all you're looking at for this week, though? Is there anything else that's that you're really eyeing, or you're kind of just looking at that?
I mean, I'm really not interested in anything USD, at least to start the week, just because we do have the bank holiday tomorrow. So I'm trying to stay away from USD pairs for right now. So this is probably going to be the one I'm just going to play for the beginning of the week. Once we get past the bank holiday tomorrow, then I'll go ahead and just reanalyze a lot of my setups and see what the market is giving you. But just to give you a little just a little idea of what I am thinking. I am in agreement with you guys in terms of the dollar itself, right? Dollar weakness possibly coming in. I'm not in agreement with the long-term positions that you guys have. You know, I know a lot of people believe that the dollar is just going to completely just tank off the face of the earth. I completely disagree with that 100%. So that's just my opinion. What I could see personally for the dollar itself, though, is I could see us definitely coming down and clearing this 102. All right, that's definitely something I could see. Right, a nice little move down to the 102. But I just can't see us. And again, I could be completely wrong, right? And I want to continue to say that because it is what it is, right? But I would be very interested in seeing this thing push lower and then eventually find some more demand and actually go ahead and really start to pick up some steam. We have a lot of liquidity that we can go ahead and target back up to the upside here for the dollar. All right. And I refuse to believe the market is going to just completely tank without filling a lot of these imbalances first. Right. I just can't see that. So for me, I'm interested in I do think we're going to start off bearish, all right, to start off the week. But overall, I don't think we're going to go bearish just yet. If we are going to go bearish, then it probably will be maybe if we can clear this 109, possibly even come up to around this 109, 110 level, then we might have a chance to go ahead and see this thing go ahead and go lower, right? Possibly target liquidity at the lows. But until then, I just can't see. I can't see long-term.
I'm actually more or less in agreement with that. Again, I think we mentioned this a few times, and it might have been a lot of just more in the live trade room rather than here on YouTube. So some of you guys might be hearing us say this for the first time, but it really is how it depends on how it reacts after that sweep of the 102. Because basically what we have there is like that sweep where you have the climax low there. Whatever it is, like 101 or 100, yeah, that little nonsense low down there. The question there is like whether or not that's a spring, and because it remains untested, is why, like, again, I remain skeptical. It's like I'm gonna lean towards the bearish side because I want to see a retest of that, but there is the question of like whether or not that will be able to, either hold price action or go through it. If we break through that, I'll remain bearish. Then, at that point, I'll have to. But I would like to see exactly what you have. And I've been talking about this a little bit, right? I do believe in a mid-year pullback for the dollar, right? I've mentioned this a few times. I'm a big advocate for a mid-year pullback in the dollar because that's what I believe will actually give us a decent enough pullback in things like Bitcoin and NASDAQ and stocks. And I kind of call this like the last rally for the dollar, right? So I would like to see the same thing more or less. I don't know if we'll get all the way up to like 111, 112. I'm definitely looking at between 107, 108. Definitely want it to come up to that 108 area. Again, how it reacts with that imbalance, whether it kisses and goes down or it wants to fill the entire thing, I'll come to that conclusion later, like after we begin to make our move up and I can assess the volume and everything. But yeah, no, bro, I'm actually in agreement with you. I do want to see this because, I mean, ultimately speaking, and I keep mentioning this whenever I can, this last rally we're looking for in the dollar is basically what I'm going to use to empty my fiat accounts. Right, I'll be using this last push in the dollar and the discount in asset classes like crypto and stocks to basically live off of ramen and just invest and really just empty my accounts. So if we are going to get these pullbacks like I want on a few asset classes, I'll actually need this to work out. And I think I even have this same arrow drawn on my chart.
Yeah, I mean, the make or break point for me on the dollar is definitely going to be this area right here, the supply zone. If we smash,
I mean, that would be ideal because you got the lone candle.
Listen, if we smash through that zone, then yeah, this thing is going to continue to go into the upside.
Oh, that's I'm not in agreement with that. I agree that we'll come up and maybe test that, but I mean, for us to go above, like if you're calling above 115,
I'm definitely calling above 115.
That's a dream if you ask me.
Just like your GJ's a dream, if you ask me.
Let's not.
Right,
let's
again,
not start.
Just keep in mind, and family, just keep in mind, guys. Like, there's a reason.
Macro Daddy, okay.
I don't think you're paying attention to the macros then, because that's exactly why I'm paying attention. Because again, for me, I'm looking at it.
How are you so crypto on? How you so
fundamental
bullish
thing.
on Bitcoin, bro, with an analysis like that, though?
I mean, I'm not so bullish on Bitcoin. I just believe the low has been created. I think we're just gonna
That's what I'm
range bound now.
saying, though. If you get what you're talking about here, bro, there ain't no low on Bitcoin created.
I mean, it is what it is. If there isn't, but it's hard for me to believe that the dollar is done pushing. It just really is. I mean, fundamentally, it just
I'm
doesn't make
curious.
sense
What
at all.
fundamentals make you think that we're going above 116?
Okay, that the Fed is still hawkish. We're still raising rates. There's actually talks of potential even 50 basis point rate hikes. The bond market is absolutely skyrocketing. It has skyrocketed last week, which also shows that there's still a lot of fear in the market. I mean, there's still a lot of fundamental reasons why the dollar is going to be bullish. A lot, right? And I think that's what you're ignoring more than anything. And yeah, the fundamentals is really where it's at.
What do you make of the dollar decline while bonds are going crazy, though?
What about this drop right here?
Yeah, I mean, bonds have been going crazy week over week, like you've been saying, but I mean, like the dollar hasn't taken that into account at all. I mean, if you go look at bond charts on like the daily, like I mean,
yeah, let's go take a look at it real quick.
I mean, I am. That's why I'm asking. Like, you see how like a bullish bonds have been like day over day.
I mean, this bond market shows me
well, yes,
extremely bullish dollar.
But I'm talking about specifically about the time frame where the dollar was dropping and bonds were continuing higher.
Let me see. Hold on. I'm
like literally like this last leg. I mean, like yeah. There you go. Perfect. Let's
see what you're referring to.
I mean, put it on the weekly so it's easier. We're looking at like the most recent like 8 weeks. Like the dollar has been dropping, bonds have been going. I mean, bonds have been kind of stagnant. That bond specifically, exactly,
and that's even more reason for me to believe what I'm saying though, because if the bond market is already pushing up, then there could be a delay here in the dollar itself, right? Because again, the bond market is usually one of the most, I'm not going to say most important safe haven, but that's usually the one that investors go to the most, right?
So your belief is that the dollar is lagging behind bonds?
I believe that for sure.
Okay, my thought process is the opposite. I think bonds are lagging
because even if we
dollar.
look at the bond market itself, right, even throughout this entire big correction that we've seen for the dollar, it really didn't do nothing, right? There wasn't much move at all, which shows that there's still a lot of investors still buying bonds, right? Even through this entire little sell-off that we had, you know, so the bond market is still very resilient. In fact, if we compare the bond markets, which I always like to do, bring up the 2-year and the 10-year, which is something that we always talk about as well. I mean, this thing is still, the yield curve inversion is still very much there, right? Like it's still very much attractive to buy a 2-year bond as opposed to a 10-year, which shows that for the short term, at least, there's still a lot of upside here for the bond market, which is going to lead to upside for the dollar itself. All right. So I'm
interesting. I mean, interesting theory. I think we're just on opposite sides of the spectrum. You think the dollar is lagging behind bonds, and I think bonds are lagging behind the dollar.
Now, why would the dollar be lagging behind the bonds?
I don't know. That's what I'm trying to figure out. I think the dollar is leading the bonds.
No,
I think bonds are lagging behind.
Oh no, I think the complete opposite. It just doesn't make sense for what you're saying, in my opinion, like at all.
That's okay.
Like what? The bonds is what they typically go to more than anything, right?
Yeah, but I think because they've accumulated so many that they're. I think bonds are distributing. If I would even looking at the charts, like that looks more like.
Bro, the reason why the dollar itself has gained so much strength is not because people are technically really just investing into US dollar, right? They're taking their dollar and they're investing it into bonds, right? Or they're just taking their dollar and investing it into other safe havens. But everything is going to the bonds, right? Like they're not just sitting in dollars, they're sitting in bonds. The reason why it goes up is because they're taking that cash flow and they're putting it into bonds. And that could be a reason why we did see a little bit of a decline, but yet bonds still held very strong. It's because they're still liquidating dollars and going into bonds. Bonds, for the most part, usually leads more than the dollar itself. All right. So it's just, that's why for me, I'm just still very much bullish. I don't see no real reason for us to potentially really go bearish the dollar just yet. I just can't see it just yet. I just really can't. And especially this reaction that we just got after clearing this low. Like, what? This just looks so bullish to me. I don't know if I'm seeing things differently. I mean, obviously I am. But like this just looks completely
it's all perspective.
bullish.
How you choose to look at it.
That's a fact. And I just don't think inflation is done. I think inflation is going to stay relatively high for a while now, right? Like just think about that. If we stay at 4 or 5%, that's not achieving their goal, like at all. right? So they're going to
No, I mean
remain
they're gonna
hawkish.
keep rates pretty high, and I know there's talk about it going to
So
like
so so to answer
6%. I
this,
mean
man.
we're
So
gonna
to
hear
answer
about
this,
Nestor
right?
talk about that.
So to answer this, right? So if you know that they're going to continuously raise rates, how are you going against the dollar?
Because I don't think that the amount that they're increasing it by is enough to spook the market.
It's still hawkish. Like
Yeah, but it's not.
whether they're
Yeah,
even raising
so
it by 10
this is the
basis
thing with
points, they're
fundamentals
still
though.
very much hawkish.
It is, but that doesn't necessarily mean that it's so hawkish that it spooks the
It's
bigger
still
money.
hawkish, bro. You got to understand.
Nah,
It's still
I
the
think
cost of the
it's hawkish enough to keep the average individual and the average trader scared, but
bro.
I don't think it scares the big money.
You got to understand, right? Interest rates is what, right? That is the cost of money.
Yeah,
So
I know what it
even
is.
if price goes up
But who's
10
borrowing money
basis
right now?
points, even if price goes up 10 basis points, the cost of money is still increasing. It's
Yeah,
still
but
increasing.
the question is who's borrowing that money? It's
I mean,
it's
still,
individuals, bro. I don't
this
care about
world
the
still has to
individual.
go around. The world still has to go around. Money
Yeah, I
still
know,
has
but
to
that's
be
what I'm saying
spent.
though. We know that savings are at an all-time low. We know that the people that are borrowing money are it's not necessarily the institutions. It's the average everyday person. So I'm not concerned. Again, I say this all the time. I'm not concerned about the average individual's pain and like how the market dictates that. Like I don't see big money continuing to like flow into bonds. If anything, I see them
What?
I see them continuing to sucker other people into
What?
bonds.
See that just yeah, I'm just completely opposite. I think even now more than anything, especially with the most recent data that we've gotten, right, with the super hot labor market, with CPI coming out, missing projections, I mean, there's so many different things. PPI came out hot, right? Every single data right now came out hot over the past couple of weeks. NFP came out super hot. CPI came out super hot. PPI came out
Yeah,
super
you're not
hot.
wrong.
Retail
Oh,
sales came out
they came
super
out
hot,
mixed. I wouldn't say.
right? I mean, again,
Their month over month came out hot. It came out actually lower
they're
year
still
over year
missing
though.
projections though. All right, still missing
Yeah, but
projections.
projections
So
are
again, all that data combined, there's no way that I could really feel like the dollar's just going to continue to tank. It just doesn't make sense with all this most recent data. I'm not even talking about past. I'm talking about recent data. That's going to have Jerome Powell really second guessing on what they should do, on if they should pause anytime soon or not.
I mean, we'll find out
So,
Wednesday for sure. Well,
oh
maybe
yeah,
not for sure. For sure is a strong word, but or strong phrase.
oh yeah,
But we
100%.
do
It's
have the
going to be
FOMC minute because I mean, again, we have to see how the Fed reacts to the data. Again, you think the reaction is going to warrant? I mean, if they truly say that we're going to go back to 50, yeah, then like you're probably right. We'll probably get more aggressive things. But even then, I don't think
I don't think
in the longer term it'll affect too much.
if the
Again,
labor
we'll see. I
market,
mean, like I let time dictate it, but you do make great points. I just interpret the points different.
yeah, not for
Can,
sure,
can
for
I
sure.
can I chime in? Like,
Yeah, what's up, bro?
how often is it that the technicals don't perfectly match? Like, two things can be right at the same time. So it's just like, how many times do you see the market not react to what you see fundamentally? Because I mean, fundamentals are so black and white. It's just like either it's positive or negative. And I feel like if everything we do is based off of that, then everybody to have a 100% win rate. Like, the market, in my opinion, is not going to just move based off of what we see based off of news releases, because if everybody's seeing this news release, then I'm just more inclined to think in terms of, okay, what does everybody see and how can that be exploited? Like, I mean, we know what the obvious answer is here based off of what we see and
Mhm.
based off of news releases and stuff. But that is exactly why I kind of want to do the opposite, if that makes sense, because I know everybody's thinking one thing, and
That's
I
the
kind
thing.
of want to.
I don't think everybody's thinking what you guys are thinking. And you have to be able to separate as well, right? The actual facts from the sentiment behind the facts. Those are two completely different things, right? What are the facts that are coming out consistently? And then what is people's or institutional sentiment behind those facts? Based off the data that we have seen so far, if I was, and again, I'm not smart money, right? I'm not no institution, but if I was an institution, I'm going to be very fearful to get into, riskier assets when I know that the labor market is still extremely hot. I'm going to be fearful to go ahead and start getting into riskier assets right? When I see that CPI is now possibly finally starting to slow down a little bit, right? We're now starting to miss projections. I will be very fearful as an institution to go ahead and start investing back into assets when PPI as well is also starting to slow down, right? So it's more so thinking like that, right? If you know that the Fed is going to continue to raise rates, and now due to the labor market being as tight as it is, now there's even potential talks of them even being a little bit more aggressive. How is that not like nobody's going to be confident in investing into equities like that? That's just not how it works, right? They're going to go based off the data at the end of the day. Yes, the rumors are the rumors, and they typically play the rumors, but you cannot ignore the facts of what's being said. Now, and I will say this, if the labor market wasn't so strong, I would be having a completely different conversation right now, right? Like if NFP didn't come out so hot, like we're talking about, they were predicting what, maybe 100, 200,000 or 200, whatever it is.
It was projected 240. It came out 560 or something like that.
That's a major miss. And
yeah,
unemployment
but do you think
dropped.
that's not like a one-off? Like that seems like such a
unemployment
one-off result.
dropped.
Like now think about what the so the question is then, like, what do you think NFP for March, the March release looks like, or well, the one that we'll get in March for February?
I mean, what are the projections? It's obviously going to be.
I mean, I don't think
lower.
they have projections this far out. They might, but it's going to change by the time we get closer.
Yeah, it's obviously going to come out much lower, obviously, than
that's what I'm saying though.
Right?
Like how do you think the labor market can even keep even the expectation of that? Because now the market is going to expect so much from the labor market. Now everyone has that thought process. Oh no, the labor market's actually hot. It's actually hot. And then they're going to get smacked with reality later to find out that like it just like a one-off is not the same thing as it being hot.
I don't see it as a one. I see, how drastically it came out is possible.
Yeah, obviously it's not going to come out it could, I guess.
But I do believe there's still a chance for it to still supersede the projections, right? Now, I don't think it's going to do as aggressive as it did, but it could still come out hotter, right? Not as aggressive, but say the projections is 200 and it could still come out at 250. That's still a major beat, right? And again, you have to just keep in mind, this tight labor market is the reason why Jerome Powell was also still very hawkish, right? If the labor market wasn't the way that it is, then he probably would have been obviously seeing a lot more case to really just pause in general with interest rates.
Yeah, I feel you. For me though, you've heard me say it 100 times, and I know you disagree with me, but I don't specifically care too much about the labor market and the job numbers.
That's shocking to me as well.
But I have a very specific reason. It's again because it's I know they want it to go lower, but it's tough to even achieve that when the cost of living is so high, because you have people that quite literally need to go back to work or to double up on jobs to survive. So it's like the survivability of the person, like you can't have like again, this is why I don't care about it, because for me, like, it makes no logical sense to expect a weak labor market. Like, I understand that's what they want, but it doesn't make any sense to expect that. When the cost of living goes through the roof, you're going to pull more people into the labor market. Even again, like to your point, you've said, like, again, like, there may be, like, layoffs in, like, the tech industry, but, like, obviously those people are going out and finding jobs at other places, right, fairly easily. But, and again, because, most places need people, and then they understand people need to work. I mean, like, the labor market's still a joke anyway. If you go on, like, Reddit, there are, like, tons of companies that say they're hiring that are, like, not even really calling people back that are qualified. So it makes you believe that, like, again, just because there's opportunity doesn't even mean the companies can necessarily afford it or want to afford it. And there's a whole bunch, of arguments on wages, and, like, there's just, like, a lot going on inside the labor market, which is why I don't specifically care. But I think to expect a weak labor market when the cost of living is through the roof and you have eggs at like $9-10, like a dozen, like you can't expect how are people going to survive if they're not employed to some degree?
And right? I think that was honestly,
like, if the labor market was weak, bro, like, this country would be a shit show right now.
If the labor market was weak, inflation would have already been down near the 2%. That's exactly
I don't believe that, not with all the money printing. In an idealistic world when we didn't print $10 trillion plus, yeah, maybe, but
I mean, again, that's just what the Fed was hoping for more than anything, right?
Yeah,
They
no, I
wanted
know.
to
That's
be
exactly
like-
that's what they wanted
Now-
to see.
now-
That's what I'm
now,
saying.
like, now
It's
just
illogical to
use-
even want that though, because with the cost of living so high, you can't expect people to not go out and seek opportunity like they
Now,
have to.
use
They're in
that
a
same
position where they
logic
have
that you're
to.
saying right now, though, right? You said that because of the fact that people are in dire need of capital, they're going and they're getting jobs, not just one, but two or three. We also live in a consumer-based country where people that get capital, they're going to do what immediately?
They're going to
with
spend it. We know
They're
that.
going to spend it.
Yeah.
Spending does what? It fuels inflation. So that's why for me, it makes so much sense to pay attention to the jobs market.
But do you think okay, so fueling inflation and driving inflation above like 7-8% are two different things. Like keeping inflation at like 3, 4, 5%, yeah, because it contributes to consistent inflation. But is it gonna drive inflation numbers that we haven't already seen, or that are incredibly worrisome or unnatural for that type of economic activity? I don't believe so. Is it gonna keep it higher and harder for them to achieve their 2% target? Yeah, absolutely. Right,
All right,
because again,
so-
that's just a fact, right? As
Okay,
they
now
consumers
use
spend,
that
but I don't
same
think it's
logic
gonna
you
I don't
just
think it's
said.
gonna drive further inflation.
So use that same logic you just said, right? You said that there's a chance that inflation does remain high. It has been
Yeah, I expect it to
quoted-
remain high.
So exactly my
But
point.
high by definition is just above 2%.
Exactly my point. That is only fueling
Yeah,
my
but I'm
point,
expecting
though.
them to continue this for another year. I'm just saying I don't think it's going to impact markets in the way that you think it
for
is.
another year, in my opinion, of course, that means that we are extremely bullish the dollar.
No, I think what that means is see again that's the difference is like so that's where we disagree, right? We disagree on the same impact of the data, but we disagree on how the market's going to interpret it. You think that just because the numbers remain high, that means immediately we have to go create new market highs. Whereas I just believe that just gives the market more time to sit in a range and redistribute out. I don't see it just going above 107 into 108 into 110 to what, because that's like a trending market. That's you would need consistently worse data for that. When you just have consistently bad data, meaning because again, 3 months in, if the market just sitting at high inflation and nothing is changing, it's kind of plateaued for 4%, 4.2, 4.5, 4.1, 4.4. Yes, it's high and it's theoretically not good, but it's also not changing. So it's you don't get a fully trending market in that kind of scenario. You're gonna probably get a retest to 108 and then come back down to 104 and then go back up to 106, then come back down to 102, and it'll be a longer dragged out process. I don't agree with your arrows of just we're going to take out 102 and then go above 115. Things would have to be getting progressively worse for that. So it's yeah, the numbers and the data will remain bad, but it's when things are remaining bad for an extended period of time, the amount of impact that has on markets changes. It's
Yeah, I don't know.
some of the same
I'm
mode.
definitely seeing it differently.
It's if every day for 2 weeks it rained. Eventually you're just going to accept that it's going to be raining. You're not going to be wake up every the first 2 days you're oh fuck, it's raining. Oh shit, this sucks. But by day 5 or 6, it's just going to become a part of your norm, and you're going to stop really caring for it. You're just going to adjust to it.
That's the thing I don't think you're understanding. The Fed does not want 4 or 5% interest rate to be the norm whatsoever. They've made it very clear that they are going to do whatever it takes to get to the 2%, which means remain.
Yeah, but they also made it clear that they're going to hold
to.
for extended periods of time. They've said this multiple times.
And that is very bullish.
No, I think
that's
I think,
exactly what
again,
that means.
I think that effect wears off sooner than you think.
No.
It's all propaganda, man. It's like watching the news.
I mean, again,
I
mean, I love the discussion first off, and just
Oh
for
yeah, I
people
love this
listening,
stuff too.
we're just having a healthy discussion again for your guys' sake, because we already know what what each other believes. I don't need to hear Abel say this again. We're just kind of doing this for you guys.
I love this, to be honest.
Yeah,
with
no,
you.
yeah,
I
so do
really
I. I love it. I love it when we can just have healthy debates.
Hell
But
yeah,
what I really want to know is what the people in the chat think, because you guys have been hearing us say, a lot of things about a lot of different fundamentals, and if there are questions, if there are things you guys want us to clarify on either side, let us know. But ultimately, the market, we're we can sit here and discuss this all day long, but the only way we're gonna get an answer is if we come back in 9 months,
and see what
happens.
happens.
and see what actually happened, and
Yeah,
what
only time will
data
tell.
actually came out, and all that. But let us know in the chat, family, because whenever we get in these little like debates, it's always better for you guys because you guys get there's so much knowledge and gems dropped on the fundamentals.
So much value. So
Because
much
again, like
value.
everything, again, guys, I agree with everything Abel was saying. I just disagree with his perception of the impact of it, and he disagrees with mine. To be fair, and that's that's great. Like, one of us is gonna be right, or in some situations, both of us might even be right. Like, it can go take out like 112 all the way up to 113, and like, Abel's basically right, and then it can still continue down, and that basically makes me right.
Yeah. I just see, I personally just see, and again, it really depends though for me on how we react around this 110, 111 level.
No,
right?
I mean,
Like,
I feel you on that. Like, I mean, I have to
if
see
we
what happens
clear
at 108
this-
before I agree on the
Oh,
110.
man.
But I do like that lone candle. That's like a pretty standard technical play for
Listen,
me.
all I'm saying is if we clear this 110, we are going to retest these highs at the very least. At the very least, in my opinion, of course.
Yeah, I would say if we break above that 111, maybe pending the reaction. Pending the reaction.
I mean, there's just, in my opinion, there's just so much liquidity now positioned above these highs.
I mean, I can agree with that. I can agree that those highs are somewhat questionable. I mean, it's more
These
like
are
a type 2.
suspect
Yeah,
ass highs. Like these
it's
highs
it's
do
like
not
it's a
look
type
strong
2
at all.
distribution if it is. But yeah, the
Yeah.
closer we push to those highs, the worse it's gonna be.
Yeah. So,
Let me see what we got. Hold on, there's a bunch of stuff in the chat.
Liquidity is like easy to spot. I feel like the thing is just like, when is it gonna get swept? Like, when is it gonna be?
Yeah,
taken
that
out?
too. Like we can go all the way
So-
down to like 90 before we come back for it. And
Yeah,
like
so
some would
like,
even argue, I mean, like, yeah, look at that monthly chart, bro. Give me that whole thing as a UTAD. Send
this
that
whole
thing to
thing
all the
a
way
UAT
down to, bro. I'm so
this
big.
whole move is a UTAD?
On a monthly basis. Hell yeah, it could be. Absolutely.
What?
Absolutely. How could it not be?
I just think that that's like a super extended move.
It
to
is. Don't get me
potential
wrong.
UTAD.
Don't get me wrong. It is, but we've already returned back to the range, so the possibility of it being a UTAD is.
I mean, it's there.
1000%
It's definitely
there.
possible, right? Since we did come back towards the range, but I think this more so is just retesting previous structure to then
Yeah,
possibly
that's
continue.
the retail.
Come
way
on,
to
man.
look at it. I mean, I
don't
agree
care
with what
about
you're
that.
saying, but I would say, like, if I was gonna look at that monthly and I was gonna look at it unbiasedly with no fundamentals and just pure Wyckoff logic, I fully expect it to go take out like 77.
Please God, because I'm in this EU buy.
Yeah, no, I mean, you gotta like, I'm bullish EU to like 130. For like, if I get what I want, like, I'm looking at like 134 EU. So, again, people think it's crazy, and like most of you won't even be here by the time it hits TP if it ever even does. Most of you will have quit the game by then, but
Yeah.
I'll still be here whether I'm right or wrong.
All right, let's see what they're talking about in the chat because they
Yeah,
are going
let's
crazy.
yeah, 'cause, I gave them a few time to digest. There's a few people on both sides. Let's see what we got though.
Let's see. I appreciate you, Bert, as well for the $20, bro. You are an absolute savage, and we will be going to a Ravens game this up and coming football season. I
Bert,
promise you, bro.
Oh yeah, we got Tyson too, huh?
And Tyson,
$1.99.
shout out to you, man. Again, those two are just constantly always showing love. Bert and Tyson, man, is
Yeah,
much
that's a fact. Yeah,
appreciated.
shout out to both of you. I know Bert's always dropping them 20 bombs. So
Yeah, and Tyson consistently is always showing love as well. So we appreciate you guys for that for sure. Definitely helps a lot for sure. Let's see.
what about the petrodollar ending? Yeah, so I mean, let's not even get started on that. But there are a lot of other things to consider, like again, petrodollar ending, BRICS being a threat. I mean, the whole switch to CBDCs could have an impact that we're just not considering. The Fed can come out with a CBDC and peg it to a certain amount of dollars, and that can send the market who even knows which way, depending on how they peg it. So yeah, I mean, there's a lot of things again that could happen over the years that are, we could be here for hours discussing all that stuff.
Yeah. Let's see. I mean, family, let's just do this really, really quick because there's a lot of freaking comments now to that, right? Like a lot. And we appreciate every single comment you guys have as well. But if you guys believe, right, just keep it simple. If you guys believe we're still going to remain bullish dollar, just drop a 7 in the chat. If you guys
just type bullish or bearish.
Oh yeah, just type in bullish
just give
or
us
bearish,
just
right?
because I'm gonna forget what number is what.
I thought type in bullish or bearish family on.
Just
on your guys'
tell
time.
us if you guys are bullish, bear in the macro, right? So let's look at it with like the perspective of like we are like a year and a half, 2 years. Remember, like Abel's bringing up 2-year bond. Like there's you look at it from the macro. Don't just expect what you're looking at this week. That's definitely not what we're discussing.
No, because if we're talking this week, then I definitely
that's
dollar.
I think we're all in agreement of what's gonna happen this week based off what we currently got.
Exactly. We're just thinking more long-term projections more than anything. All right, and if you also like this Valley family, let's go ahead and get us to 100 likes, man. Let's go ahead and get us to 100 likes, family. Let's see. Bull, bear, bull, tank, short-term bull, long-term
Tank.
bear.
Shout out Cozy. I already know that's Cozy.
bear, 1 year from now, bearish, range bound. That's also a decent answer.
Yeah, I mean, range bound is probably
the
even the
most
side that I
likeliest.
lean, because again, I just think the impact of it won't be great.
Let's see. Rain bear, long-term bear until we install. Well, if you're talking 2 or 3 years, but bullish this year. Okay. Yeah. I mean, again,
Yeah,
that is
I'm
a
definitely
great point
bullish
as
into
well.
the middle of the year. I agree
that
with
is a
that
great that is a great point that Glamour has brought up too. Right? Because again, I don't think that the Fed. I think by the end of this year, the Fed will have pivoted. And if they do a pivot, then my conversation is completely different. My bias is completely different. Right. So I'm more so just making my decisions and my biases based off what they're currently doing for this year. I can't predict what the hell is going to happen next year because I don't know what's going to happen even in the next CPI reading. Right. So, yeah. So for at least for this year, I'll say I just think that we're going to see this move higher.
Yeah. The real secret to this too is in oil. Again, oil is really the key on this, because again, oil is going to influence the CPI numbers more than any other single asset will. So again, we keep talking about this.
Explain that one time for everybody.
Well, so I mean, so there's two different measurements for CPI. Just to be clear, there's core CPI, which removes things like food and energy, so that'd be like taking away your groceries and your oil, and then there's standard CPI, which includes that. The Fed will typically go off core, just to be clear. I mean, they'll take in both accounts, obviously, but they would typically go with core. But the thing is, like, the price of oil impacts everything from production to transportation to, I mean, it's embedded in almost every part of capitalism that you could imagine. So if oil does continue up, right, then CPI numbers will find it harder to fall. Even if the price of everything else in CPI falls, oil, by naturally going up, will influence the price of those things once again, but also influence the CPI number itself. So oil is really the key. And if you don't believe me, just go take a look at the oil chart. I mean, I don't even know what screen I'm sharing right now. Okay, I'm sharing yours.
Yeah,
Let
you're
me
on
just
my
go
screen,
over to
yeah.
like the price of oil real quick. See, like I was looking at the bonds here. I mean, oil has been pretty stagnant, but like generally speaking, you know, what led to the decrease in CPI is the fact that oil started to fade off from like that, like, you know, kind of pre-war run, right? So when oil was bearish and beginning to continue to fall, and like and again, I was looking for like buys after this low and whatnot like that, but once those all got invalidated, that's kind of when I switched my bias on the dollar and was like, okay, yeah, cool. So like we can expect dips in CPI, again, because oil prices are kind of settling. So again, the more bullish that oil is, and again, like I am expecting it to pull back up to 85, will make it harder for CPI numbers to drop, will make things like production costs and transportation costs and consumer costs to continue to rise. And that's like really the thing. So if you really, I mean, like, again, like you could look at bonds, there's a whole bunch of things you could use to like measure. For me though, it's oil, because the number one fundamental that I'm looking at that the Fed cares about is CPI. Again, Abel's looking at things like the labor market and all that. Again, I don't specifically care about that data, just like I don't care about the housing data. We expect the housing market to cool off. We've been saying that for months. Right? I don't specifically care when that data comes out. But for me, it really is oil is like the key. So, and again, that's what leads me to believe that we will get like a mid-year rally, because I am expecting oil to, you know, come back up to this 85, 87 area, kind of giving, you know, CPI this ability to kind of not begin to fall. And if we really look, like, you know, CPIs began to slow down in the past reading or two, and, you know, even to the downside. And that's because, again, oil really hasn't done anything. Like, it really hasn't continued to go down. So like if oil fell through the floor, your future CPI numbers again would continue to fall through the floor. If oil is going to continue to go up, then you're more likely to have, you know, those higher or those mixed signals that we're getting out of the CPI data. So again, it's just something that's so deeply ingrained into capitalism that literally like every step from, you know, from the damn near beginning all the way to the point where you get in your car and drive over to pick up said items. So it's just a giant piece of the puzzle, and for me, it just greatly matters. So, and that's again, I just monitor oil week by week. You don't have to look at it every day to get the idea.
Yeah, oil is definitely interesting for sure. Now I have a question for you, Skaggs, right? Because I know you always
That's
say that
good.
you don't care about the labor market.
Well,
But
it's not my leading indicator. I won't. I mean, I keep an eye on it, but I don't specifically care too much. But what's good?
yeah, that's just my question, right? What are the two objectives that the Federal Reserve has?
Well, it's to combat inflation, which is number one.
Oh, that's one of them. It's not. I mean,
Yeah,
right
but
now,
it's well to me it's number one. That's the fourth. I mean, they talk about that before they talk about anything else. That makes it number one for me.
I mean, because the other one, which is what? What's the other one?
I would assume you're just speaking about just tightening up the labor market
Yeah, right. There's a bilateral process that the Fed
relationship. Yeah,
has,
they got parallels. I know.
right? So the two objectives that the Fed has is a super tight labor market and stable prices. The reason
Yeah.
why they're focusing on inflation is because obviously that's the one thing
That's the
that,
stable prices.
yeah, that's out of control, which is why they're so focused on it. The reason why they don't talk about the labor market as much is because that is under control, right? That's something that they don't really have to worry about too much because it's exactly where it needs to be. So with the fact that that is something that the Fed really does rely on, and that is also a major objective of the Fed, why do you think is not as important to you?
It's the same
to
thing that
really
I
look
said
at?
before. It's because you have unstable pricing, then you're forcing people back into the labor market. So all I care about is the stable pricing.
Now there's the argument as well.
I know, and I know if you get the labor market under control, then again, one hand washes the other.
I mean, it's not even that, right? I was going to also bring up, the fact that because of unstable prices, that is what really led to the rise of interest rates. Now,
100%.
that the rise of interest rates is not just affecting us consumers, but is affecting business owners too, right? Because now obviously their profit margin is becoming a lot tighter, a lot thinner because of the fact that everything is increasing over time, right? So the labor market also plays a major role because of that, right? Like, again, yeah, I get it. There's a lot of jobs. There's millions of jobs still available out there, right?
Tons of
Which is
them.
why the labor market is still as tight as it is. But to ignore it is kind of crazy to me.
I mean, it's
right?
ignore is a strong word. It's not. It's not the leading data that I care about.
Yeah.
To
I
say
understand
that I completely ignore it would be wrong. But it's not priority number one for me.
Yeah.
And again, like you could put the labor market first again if you wanted to play that side of it because again, one hand washes the other.
Yeah.
But for
Kinda
me,
goes hand in
again,
hand.
like they don't necessarily like okay, what's do you know what the clearly defined target for the labor market is for the Fed?
I mean, it's to keep unemployment low where it's at,
No, but
3.4%, 3.5.
what's the actual specific goal from them?
It's to have low unemployment.
No, but
That
what's
is
the
their
number?
goal. It's around 3.4, 3.5, which actually 3.4 is like the lowest it's been in years, which
Yeah,
actually
well, I
is
mean,
like the
we're the
most
lowest it's
recent
been
number.
in like 50 years right now, I think.
Yeah, and that's the most recent release. It's
Okay.
3.4%.
I mean, I don't know. It depends on what number you want to play. It's like you want to look for that number, or do you want to look for the CPI number? I think as traders, you have to pick
I
one.
honestly think they go hand in
picked the
hand.
CPI.
And I think they go hand in hand, which is why I say it's so important to incorporate both of them. All right, because if we
Yeah, but
didn't
for
have
me,
such a,
I still hold CPI higher personally. That's just me.
I mean, that's definitely the main focus because the labor market isn't where it is not in a bad shape at all, right? But again, the Fed is also still paying attention to that tremendously. Again, if the labor market wasn't as tight, bro, and if inflation actually increased to say 3.6, 3.7, even 4%, then I will be having a completely different conversation, right? It might be a little bit on the
Yeah, but
flip side.
it's hard to achieve that in a realistic scenario.
Is it really? I don't
Yeah, because
know.
like you said, one hand washes the other. So it's like even if one does creep up, the reality is that eventually, I mean,
One what's
one
crazy?
of them could be leading.
Yeah, you know what's crazy? We had a conversation too last year. I mean, we could say just a few months ago, In fact, I also thought so too, right? Where I mean, we even seen crazy layoffs already occurring, but yet the labor market
I
is
think
still
crazy is
super
a
tight.
tough word.
I mean, clearly it's definitely tough, right? Because the labor market is still where it's at. But from perspective of just seeing all these headlines, there's been a lot of layoffs occurring, and I was thinking, and I was completely wrong with this, right? I was thinking that unemployment was going to continue to increase, right? In fact, I was telling everybody, in our community here, literally 6 months ago, right? I'm like, yo, listen, there's going to be massive layoffs, and unemployment is going to increase, and that ties into the fact that inflation was high, right? Because inflation being high cuts the profit margins for these businesses, which is now going to cause them to start laying off a lot of people. So yeah, but it didn't come true. Still extremely, extremely tight. So I don't know. I just think it's important to incorporate both. I really don't hold one over another per se, because again, I think they do. One hand wash the other, like you said, which is why I like to pay attention to all the data more than anything.
Yeah, I think the more data I consume, though, I think that the easier it is to come to a conclusion of things being mixed, and I don't like that. So I like to
I agree. There's
specifically
definitely
neglect specific data. And again, I mean, to each their own. This is what you guys
yeah.
are gonna have to do when you build a fundamental plan, right? Like inside of my fundamental plan, like this is how I prefer to look at the markets. I like to look at key things that the Fed is looking at. But I mean, again, if they're looking at like 4 or 5 different things, I'm gonna pick the one that I think is the most important metric, or at least the metric that is more relevant to the things that I'm trading. Now,
Yeah.
again, I do trade
No.
things like indices, and make the argument that the labor market is obviously going to be very important over there.
Yeah.
And it is. I mean, I'm not going to sit here and say it's not, because obviously it is. But again, if you want to consider both sets of data, consider both sets of data.
Mhm. Yeah, for sure. I mean, now, what do you think about GDP?
GDP.
Mhm.
Honestly, bro, I stopped caring about GDP after they tried changing the definition of recession. That's
That's a good.
honestly like I
That's a
was with
good
it,
point.
bro. I cared a lot about the GDP number. And then I just realized that if the GDP number don't come out to what they like, then they just start changing definitions. I mean, they did the same thing with CPI. They literally just changed the way they measure CPI too. So I might
Mhm.
even have to just throw that away and be
Yeah,
like, you
and the
know what?
reason,
I'm gonna just let y'all figure stuff out with your new definitions here.
yeah, and the reason I bring
And
it
again,
up
that's
is
also
that's
why I'm interested to see what CPI comes out with over the course of the next 2 months, because again, the way that they measure it is not even the same. So these numbers that we get that everybody think are actually this way, it's like, is it actually this way? Or is it just because of the measurement change? And I think a lot of people are forgetting that they changed the way that they measure CPI. They don't do it over a 2 year basis anymore. They do it over a 1 year. And I do think that they did that specifically to manipulate the data in their best interest, because why else would they announce this, especially as suddenly as they did it? So again, like you have a few things at play too. It's why I'm cautious about the NFP number that is like this magical number that, again, I don't think the market's going to be able to repeat. I think the market's going to get very disappointed over the next 2 3 NFPs in comparison. Do we still beat forecasts in some situations? Yeah, maybe. But forecasts are like oil inventories. They could set that forecast to whatever the hell they want. They could tell you they're expecting nothing, and it's a forecast is a forecast. What they have it forecasted as today and what they have it forecasted as tomorrow is irrelevant. It's like the weather guy telling you it's gonna rain on Thursday, but then by Tuesday it's telling you it's gonna be sunny. Like, it's just, the forecast is like, to be honest with you, is not as important to me as what the number actually comes out as. Sometimes it will sway the initial reactions, because the market will say, oh, it beat or didn't beat the forecast. But then overall, the previous to the actual result is the thing that really matters. Again, like forecasts are, again, I learned with oil inventories that forecasts can be very much manipulated. So I don't really care if they want to under forecast because they know they want to come out higher and that benefits them. They have all the power to do that, and there's really nothing stopping them, to be quite honest with you. So, but yeah, GDP, I don't know. I mean, what's it? If the forecast is for it to come out the same, okay.
I mean, that's what they're saying right now. But if
I
you
don't
go to
even
the
know how many
actual,
quarter. Is this the final for quarter four? I don't
uh,
even know. That's how little I've
no, this is for the first quarter of this year. like even if we go to the Fed website here, the Atlanta Fed website, their actual estimate is at 2.5%.
2.5. What do they
Yeah,
have it at
here-
2.9? Yes, that's what I'm
here in the
saying. Like, so
calendar,
like,
it's
what is
2.9.
this? Like, you have a 0.4% differential. Just like, yeah, isn't it? That's what I'm saying. The forecasts are just some dude's best guess.
Y'all see why I don't trade fundamentals?
I mean,
Ray
that's not
over
a
here
reason to
like,
not
damn,
trade
this
it,
is
though.
obviously Ray's like, I'm gonna just stick to my little hezzy crossovers and not even worry myself with it.
Not even worry about it, man.
Nah, I mean, that's
Ray's like,
just
I'm gonna just take my risk to reward and not
listen.
even.
I'm gonna say it like this, man. Last year I had the best trading year of my life, and it was because of the fundamentals.
Yeah, me too.
Simply because of the fundamentals.
I was just on a
Like
on a
literally
call
because
before
of
and
the
I said the
fundamentals.
same thing.
Like,
I
it
believe
was
you
so
could be profitable
predictable.
without fundamentals, but I believe in order to be massively profitable, you need to have understanding.
And I'm trying to be massively profitable.
Yeah, you
telling
and me both.
Like, it was just so predictable last year. Like, now it's obviously a little harder because now we're talking about potential pivots. We're starting to see little changes here and there, but it just makes it even more predictable of what to expect, in my opinion,
Yeah.
of course.
I would say though, and again, I don't want to make assumptions about you, but I will make assumptions about myself. I know me, and I'm usually early to my ideas because again, I play a lot off of rumors. I play in a lot of gray area speculation. So for me, again, I know that I'm early. I know that I identify things earlier than I probably should, and the things do go against me a little bit more than I prefer. But when I'm right, I'm right. And I would say I think with you, and again, this, I've known you for 8 years, so I'm gonna make an assumption, and if I'm wrong, just you by all means correct me. But again, you're probably more like you deal in like the black and white, right? You look at the actual results, the things that are happening now, and you take in that data and you make your plan. So it's like, I deal in this like gray area where you deal in like the black and white, and that's I think why sometimes we're looking at different things, is because you're looking at how things are, and I'm looking at how things potentially could be. And there's no right or wrong with that too either, just so you guys know. It's all just personal preference. And I think that's why usually sometimes, we're on track because, I've been saying something for a couple months and maybe it finally does work out for me. Maybe it doesn't. And then, we kind of like realign where, once things become the like leave the gray area into the black and white, whether I'm right or wrong on the gray is, irrelevant. But,
Yeah.
just different styles. And family, listen, like you guys could be on any side of that spectrum, right? You could either deal in the rumors in the gray area like me and understand that most times, the market's probably going to need to, go against you because of that. Or you can deal in the black and white like Abel does and, be more in tune with current market data and, then just playing that until, something in that bends or breaks and gives you like a different sort of signal there.
Yeah, that's a fact.
Devin, what's going on, bro? Tapped in on break. We appreciate you, my man.
Let's see. Where is Kyle? Everybody's asking for
Kyle
Kyle.
is on here. Kyle just listening to us rant though.
Yeah, I think he's also.
Kyle, say what's up to the chat, bro. They think you out there scuba diving in Aruba.
I think he's also just saying, you know what? Let me just sit this one out. I'm a technical guy.
Yo. Honestly, man, y'all don't want to hear my opinion. Y'all
we
don't
do.
want to hear me, man. Honestly, I'm gonna lead towards the bearish side of the dollar, and any bullishness that we're seeing is temporary, right?
That's it. I'm officially going bullish. No, I'm just.
Nah, I mean, at the end of the day, this up move that we're getting right now, like, is temporary. If you ask me, I feel like it's all just gonna get wiped, whether it gets wiped this week, or not. I do feel like this bullishness that we're getting is temporary. So, if you are playing that, if you are playing dollar bullishness, just understand that you're playing a counter trend, and the dollar.
Wait. First of all, trend is going to be different based on time frame. Just so you know.
Yeah, that's a fact.
The trend is going to be based off your perspective, based off the time frame. So just keep that in mind. Because
you could manipulate time frames to say something's bullish or bearish.
Yeah, in my opinion,
you can go on a weekly and be like, look, it's bullish, and then you can go to like the 4 hour and be like, look, it's bearish. Like you can.
I got you. What I'll do is I'll give me co-host. Let me break something down.
Oh man, y'all done got Kyle started. Let's get it.
Yep, that's it.
That's what we needed. Y'all wanted Kyle to wake up. Yeah, now he's awake. Let's get it.
Also, Kyle, feel free to go over any charts you want. I'm actually gonna go get a drink real quick and whatnot. So take over for a sec.
Bet. Go get your drink, man. Go get that bev. Don't forget the bev. Don't forget the bev. Never, never, never. So honestly, guys, if you were to ask me, structure has shifted immensely on the dollar.
Yeah.
At the end of the day, I know Ray is liking this. I know Ray is liking this little candle right here. And I like this as well. At the end of the day, I was actually bullish dollar from like actually right here, to be honest. I took a trade on EU and USD CAD, both around this level. And on one of the Profit Society premium streams, I would say about maybe 2 weeks ago, two not last week, but the week before then, we were actually calling some dollar bullishness. I believe it was on Thursday is when we were calling this out. But at the end of the day, when we go up to a 4-hour time frame, right, we're seeing a 4-hour break of structure, right? And per structure rules, that does mean temporary bullishness. But just because we broke 4-hour structure, we successfully broke 1-hour structure and we went bullish. We successfully broke 4-hour structure and we went bullish, but that can still mean that it could be a retracement on the daily time frame. So if we were to go up to the daily time frame, we have solidified structural points. Right? We have a lower high point, then a lower low point, lower high point, and a lower low point, and a lower high point, then a lower low point, lower high, lower low, lower high, lower low. Now, since we broke structure in the 4-hour and the 1-hour, our last point of structure, our last extreme level would be this last daily lower high point. So per my rule, the 80-20 rule, 80% of the times the market will continue in the direction that it's been going, and we should continue in the direction that we have been printing, and 20% of the time we're going to get that reversal. Now, whether this is that 20% or not, we cannot know just yet because we're still maintaining this solidified structure on the daily. So if you were to ask me to start the week, I am going bearish dollar and I'm leaning towards bearish dollar because this right here, I look to see this get wiped. Majority of the times when we get little accumulations like this and we didn't fill inefficiency, whenever I see little corrective moves and reaccums like this that didn't fill inefficiency, they most of the times get wiped, right? And I'm looking for this little shaded region right here to get wiped. And at the end of the day, it can happen from where we're at right now because we have mitigated off of this daily candle. If we were to draw 50%, last week on Friday, we literally tapped that 50%. So this daily candle can easily, the one that we're printing right now, can easily, trade up right now, but flip bearish. And tomorrow we can get some bearishness that can possibly wipe us this reaccum range that we're building right here, or we can get a slight little pop up for news sometimes later on this week, and then start getting that drop to the downside. And again, since we are in daily solidified structure, I can only just seek to continue to trade the market in the direction that has been going, which is the downside. So for me, like I said, this is going to be my bias that I'm going to be having for the week. And until we break this, once we go ahead and I'm gonna clear out my chart again. Once we go ahead and break this right here, that's when Abel's bias that he had marked up for you guys to come and, sweep this and then come up to up here, maybe even up here. That's a little bit too far-fetched, but
Yeah.
whether it can do something like this, that's something that I'm actually very confident in, and I would love to see that, because that would give us more room and that would give us more of a retracement and more of a premium scenario for us to sell dollar down and have a big, large swing trade that we can hold for potentially months, right? Weeks, months, maybe, right? But we can't really assume this just yet, because we are maintaining daily structure. So for now, I'm actually leaning towards it dropping from where it's at right now, or getting that last little pop up and filling in efficiency and then dropping. Like I said, any bullishness that we see, I'm very like adamant of longing the dollar right now. More so leaning towards the bear side. So what that means is, I am looking for bullish EU, bearish bearish Ucad and whatnot. And again, I'm not going to assume that we get this larger retracement until we break this. And even if we do break this and get this larger retracement, I'm more confident in the fact that it will start selling down once we get into these higher regions. I really don't think that we're going to get a break of the 114, 115 level. I really don't feel like we'll get that. And it's actually very far away for us to even, have any data towards it breaking that. We have a lot of room to go, right? We have a lot of room to go before we start, second guessing our bias and saying that we could break this, right? Our bias since November has been bearish dollar. So, I'm going to lean towards that, and I'm going to continue in that direction until price breaks these levels that I have, right? If price does decide to break out and do something like that, then yeah, that bias would be valid, but we can't really assume, right? That's one thing in this market, is you can't assume anything, right? You have to trade what you see, not what you don't see. So I don't see the break of structure yet. I don't see this being wiped yet. So I must continue to trade what I see. So that's why my bias is where it's at. And that's why I'm not really changing it. And that's why I'm not really, deciding to move in any other different direction than what we are seeing. So, at the end of the day, what that does mean is we are looking at the same direction here on EU, right? Possibly a small little retest of this liquidity sweep, or maybe we can even drop a little bit lower, basically like my dollar bias right here. We can either drop from here, or, feel this inefficiency right here. So, those are two possible trade setups that I have here on EU. And how that would look on a risk to reward standpoint is, let's say EU were to come back and, maybe retest this 1.06280 level. I would really run my stop 15 pips on this thing. And 15 pips definitely should not hurt your account. And I would be aiming towards, these highs right here, the 1.08 level. And that's about 170 pips at a 1 to 10. I'm definitely comfortable taking something like that, maybe Tuesday, Wednesday, later on during the week. Or, we can form a small little reaccum, and then maybe Tuesday or Wednesday we can get something like that. So, at the end of the day, that's kind of like my consensus on the dollar. And EU would be kind of basically, not even kind of, EU would be the exact opposite of what I have on the dollar, because they have an inverse correlation. Whatever the dollar is going to do, I'm looking to fade EU in the opposite direction because it is a pair with USD at the end. Now, the same for Ucad. I had caught a little small risk sell on Friday. Whether this holds or not is really up to the market. But in order just for this call to give you guys some fresh setups, I have this level marked right over here, and I am setting an alert right here. So you guys can set this alert with me. I do still see Ucad maintaining this bearish structure, and my targets at 1.3045 are still in question and are still something that I'd like to see. Now, if anybody is in the chat, maybe has been on these calls before or is one of our students or whatnot, can anybody tell me what this is, right? Drop in the chat. Drop in the chat. Can anybody tell me what this is that you see on the daily time frame? This little wick right here. We'll give you guys like 10 seconds.
Is that where I should put my stop loss?
No, this is where you should enter.
Yo, Kyle, just
Nah,
to
I'm
add
put my
in too,
stop
by the
loss
way,
there.
just to add in as well, bro. On the short term, everything that you're saying, I think we're all in agreement.
Yeah, I'm pretty
on.
sure that's, yeah, we went over this before you got on, I think.
Yeah, it's more so just the dollar itself. We're all in agreement on the bearish dollar to start the week. It's more so what happens after that.
Now I need more data before I start changing direction.
Yeah, Kyle said I play it day by day. Y'all are crazy.
Yeah, yeah, you guys are crazy. I need to see some more data, man. I'm gonna continue. Like I said, I have this the 80-20 rule never fails.
Can I answer your question since nobody in the chat has it?
Okay, go ahead and answer.
I mean, well, unless any of these are right. I mean, Cozy said closed candle. Wally said a bearish continuation block. Somebody said institutional candle. Somebody said liquidity wick. Somebody wants to know where I see.
None of
Bitcoin
them
going.
are right.
I know. Can I answer it?
Go ahead.
I'm gonna go with it's you call it hidden supply.
Hidden supply.
Oh, look at that. Look, see guys, I'm a good student. I show up to class.
Hey, he's a faithful Currency Connect Profit Society member. So, he knows what's going on. So, isn't it crazy how this little hidden supply right here, when you mark it out on the chart and you put your line right here, this is what I like to call multiple time frame confluence, right? Having layers of confirmation on your trade setup, not just looking at one specific zone or one specific candle. Now, this daily hidden supply that we have, when we go down to the 4-hour, we have a 4-hour order block. This is actually an order block this time. It's not a continuation block. This is an order block. And at the end of the day, now that we have this order block marked on the 4-hour that coincides with the daily, now we have to refine our entry down to the 1-hour. Now, again, this is something that you could have probably played on Friday, but where I do see the most fit, best possible scenario that does fill all inefficiencies, that does mitigate everything that we like to see, is at this 1.360, at this 1.3640 level. And, at the end of the day, your risk to reward on something like this would be looking like this. You'd be running maybe like a 25 pip stop loss, and I would be swinging this thing down all the way to break these lows for 377 pips, right? So this is a 377 pip trade setup where I'm looking for USD CAD to come up and fill this inefficiency that we left behind, mitigate off of this candle, and then run our risk with, again, 25 pips for 377 pips. Man, that's a 1 to 10, 1 to 15 right there. And if we do run this all the way down to our lower targets, that's a 1 to 27 right there. So, if you're looking at USD CAD and you're somebody that trades that with me, this is a setup that I personally will be taking. And this alert right here is something that I will be executing off of. So, go ahead and screenshot this if you'd like, save this chart. And, I will go ahead and drop it in the chat as well. And, I see Wally said he has an alert there already. A lot of you guys are already looking at the same thing. So when it gets to that zone, don't be afraid to execute. Don't be afraid to push that button. It's a 25 pip risk for what? Potentially 600 pips at the most, 300 pips at the least. You might as well go ahead and put an alert there. And, I am actually very confident that this is I'm more confident in this setup. That's all I can say, right? I'm not even gonna overhype it, but this is a beautiful USD CAD setup right here. Now, maybe later on this week I can maybe hedge on a buy, something like this, but I'm not even that confident in it. That's something that I need more data in. That's something I need to see more of confirmations align for, and I need to see some different dollar, some different movement on the dollar before I start to buy USD CAD again. But like I've been saying for a long time, my confidence in longing USD CAD is not there. And anybody that has been longing USD CAD, maybe you could have caught something like this. And we were actually long from down here, but the speed, right? I want you guys to look at the speed, right? This is how I gauge momentum in the market, right? Look at, there's actually a tool that I like to use. Where is it? There's a tool, and the ruler actually makes it a lot simpler. So, look at this, right? We moved about what? We moved about 6 bars to the downside in 3 days, right? It took 3 days for this thing to make this large meltdown that we did, right? Look at the momentum. Look at the speed of this downside move. It took about 3 days for us to move 7, 8, 9 bars to the downside. I would say 10 bars at the max, right? 10 bars, 3 days. Look at how long it's been taking to make this small little bullish move that we've been making. It took 15 days. 15 days for it to do nothing.
Do you not feel like that's an unfair measurement? Why not measure it from the wick?
Okay, we can measure from the wick.
I was just curious. I mean, not there. No, not there. That was fine. I'm talking about the one you just did to the bullish side. Why would you use the circle and not the wick to the right?
Okay, we can use that one too.
I'm not telling you to do it. I'm just asking you, is there a reason why we're not?
Because this was the exact spring, technically. This was that exact bottom. I'm
that's why I was wondering if you were basing it off that, because okay, I was just curious. I was curious what the reason to measure from there was.
Now, even if you measure from here or here, it would still be the same, because look, even if we were to measure from there, look, it took 3 days, 2-3 days for us to make this large 300 pip move. Even if we were to measure from here, it took 5 days to make a 200 pip move. That's not even like that. That doesn't scream bullishness to me. The fact that all these prior moves took 2-3 days to move immensely to the downside, and this right here is just so choppy and just taking so long. When
I would say
moves like this is very corrective, if you ask me.
But so my question then is, because this is unfair though, because you're measuring that downside momentum from the end of the range. You're not including any of the it's not like it's sat there for a while, bro. Look to the left.
We have been here for
no. That's what I'm saying. No, up top. Look, the downside momentum that you measured from. That wasn't the only time it touched up there. It sat up there for all those days. So
I think he's more referring to when it actually broke out, though.
That's what I'm saying, though. But we haven't really broke out to the upside yet, so I don't think that's.
But I will say this though, because I remember Kyle used to say this all the time, right? And again, this is smart money talk, right? I remember you used to preach all the time, Kyle, right? If it's fast, it won't last. If it's
Yep.
slow, it will grow, which goes against what you're saying right now, though.
Yeah, that's what I'm trying to say. I'm like, it doesn't. I don't think the logic.
Hey,
Now
man.
the thing is,
I mean, it's a nice move. I
like
mean, I
this right
definitely agree
here,
with you. Momentum is to the downside. I'm not disagreeing with that.
like this
I'm
right
just
here.
trying to
This
like
was
pick your
very
brain on.
fast,
Mhm.
right? Did it last though?
But we haven't
No,
broken out yet either, though. To be fair,
If
that's
it's
true.
fast, it won't last.
that's what I'm saying. Like if this moves down to like 133.50 again, grabs more demand, and then shoots up to 136.40 where your alert is. I feel like, that. I mean, you have
Yeah.
to take that into
So
account. I feel like we can't gauge the momentum of what it's gonna like. 'Cause we haven't gotten up to 136.40 yet. Like who knows? Like the day that it gets up there, bro, it might. I mean, it might move like 100 pips in that day. Like CAD has CPI this week, so
CAD does have
it's
CPI this week.
so
Now
it is
again,
possible that we get up there pretty quick. So I was just trying to gauge like what you. Because like I used to do the same thing. I used to say like I used to trade in the direction of the most aggressive candles. So like to your point, like all those moves to the downside are more aggressive. Even if you do look at the ones that when we moved up, like to your point again, it takes more candles no matter what. But I was just trying to gauge, why you weren't in consideration of like all that price action before that downwards move. Because it's like it did sit there for multiple days. It's not like it was like a one and done.
If it's
They
fast,
definitely distributed up there.
it won't last. If it's
yes,
slow,
I mean,
it will grow.
Look, the DXY is bearish. That's the end of the discussion. Sell all USD pairs.
now you're correct though, Abel. This was very fast, but did it last? No, it didn't. It's now trading right back up into that.
Yeah,
So
and that's the whole point I'm bringing up. What you're saying though, because it's so fast though, that's showing the momentum overall, right? That it should continue to drop after that because of that strength.
yes.
Yeah. Now again, just based off what we used to say back in the past, that goes completely opposite of what you're saying now.
Now when I say it, there's a different context. Like, doesn't
The
mean
heavy
that
crossover will solve all of this, bro.
Don't do that, bro. Come on, don't do that.
I'm so dead ass, bro. That's how I don't get tripped up on fake imbalances.
I mean, it's not getting tripped up. We're more or less just discussing the momentum, not about the position itself.
Now the thing is, what I mean by when it's fast, it won't last. I mean that this move in general,
Just
like
bound
this,
to get corrected.
yes, it's bound to get
Yeah,
corrected.
bound to come back to the order block.
And
right?
it is. It's coming back. It's it is coming back. Now, if we get our entry, and then it just does like something like this, and we move slowly, and it efficiently trades off. That's something that'll last, and I'll be holding that trade.
Yeah, that's ideally what you want to see.
Yeah, that's something that I want. But let's say we come up to this range and we just melt and leave a whole bunch of inefficiencies.
You're gonna be
then
more
yeah,
likely
that's
to
not gonna
close.
last.
You'll be more likely to close your profits if that's the case.
I'm more likely to take profit and then come back for another entry.
Fair enough.
Okay.
Okay.
Yeah,
I just wanted to pick your brain to figure out.
Not saying that if it's fast, the trend will shift. Like, I'm just saying, like, if it's fast, it won't last.
Mm-hmm.
Yeah, we'll probably come back and retrace. But just because it's fast doesn't mean trend will shift,
Yeah, and I see what you're saying. It's more so you're saying if it's fast, there's more likely that it's gonna pull back to at least retest.
Exactly.
Go ahead and close some of that inefficiency. I see what you're saying.
Maybe don't hold your full position because you're at risk of getting hit break even and such like that. It's the same thing that I talk about when like the market springs. Like when the market springs, typically we want to see that test, which is exactly what Kyle was looking at on EU, and the same thing I was looking at. We're like, come back to the 1 hour order block, which is more or less the same thing this USD CAD setup is, just in reverse. You kind of want to come back to get that test because typically a spring will be fast, right? Typically when a spring enters the market, you will react off it quick, which is why you expect that test because it's going to end up coming back to kind of retest you. But nonetheless, I agree with the setup. I've been trying to tell you guys, like, I agree with the bearish USD CAD, especially on some of the higher time frames. I think we talked about it, like I compared it to gold and where I think it is. But yeah, I think USD CAD, if you wanted to tick like the weekly or something, is I definitely would look at it. Yeah, you're gonna have to delete some stuff, but nonetheless, I do think that has Potential. I mean, look, it looks like it's making the same type of stupid distribution it made over there all those weeks ago at the highs. Yeah, where you just get the same this same support level with the lower highs into it over and over and over and over until eventually it slips. Now, does that mean always that it's gonna hold? But no, but it does mean that it will slip. More times those little triangles, right, will always slip to some
Now,
degree.
Yeah,
I want you to.
I
want
like
you
this
to
thing
look.
to slip.
I want you to look to the left a little bit more, Kyle, around that time frame.
The other
Right.
high that's there.
Those equal highs, they don't scare you at all.
They do. So, they do.
I mean,
They do. They
I might
do.
have to. I might have to hold on. I'm gonna hijack real quick. Let me
I'm
talk
just
about
saying.
this because
I
I
don't
was
know.
the one that kind of.
They do, but we also have equal lows. So, don't these scare you a little bit?
That's fair.
Yeah, that's the
definitely
same
fair.
point I'm about to bring up here. Let me share real quick as well because
That's a good point.
so like look when I look at USD CAD here on the weekly. Right, I think my drawing is even still here. Yeah, so it is still here. Right, so if you look at USD CAD here, right, let me just make some marks. Right, here's point number 1. Right, here's gonna be point number 2. I'm just gonna identify points. I'm gonna show you how much it's exactly like gold. Right, here's point number 3. Here's point number 4, and this is just me giving you guys same kind of like idea. So here's point number 5. Right, so if we take a look at this chart and even look at the stupid little red things that I have on here, right? If we take a look at this and now I tick over to gold weekly, you have this same stupid little setup where here's your 1, right? Here's your 2, right? Here's your 3 and your 4. I guess I'll just start with 4. Right, here's your 3. I'm not even gonna turn it into a 3 because it don't even matter, right? And here's your 5. You're more or less like looking at like the same type of thing. So I got like with this. Let me take back to like USD CAD. Right, my problem here is that USD CAD doesn't have anything below the 4 and the 3. So it's like for me, if one of these sides is gonna get taken, is going to be to the downside, and then it can continue kind of back up. So I'm looking for USD CAD to do the same thing that gold did in like the sense. And like you might even argue like why isn't gold going to go down? It's because gold is already cleared for.
It already cleared the lows.
Yeah, it already cleared the lows. That's why I'm more bullish on this. But if you kind of look at it from like the same perspective where like you have, these highs and then these lows, it's like we want to form this. And I think when I actually compared it, I even said like this is like more or less where you are on like USD CAD. It's like you have a little pullback like after the 4, so it's like you got the 4, now you're going up, and like now you're gonna go take out the 4 to push higher.
Yo,
Again, does that mean that these have to work out because they're so eerily similar? No, not really. But again, like my idea,
a great perspective.
My idea on gold though would be like, again, like I'm expecting 1 and 2 to finally get cleared on gold, and if that's gonna happen on gold, well then the obvious thing is that 4 gets taken out on USD CAD. So I do see like this being like kind of the overall picture. Again, they're eerily similar. Does that mean that 4 has to get taken out? Not really. It doesn't mean that, but I would lean towards it getting taken out before 1 and 2. That's just
It's
me.
crazy. This thing's been in the range since we started trading.
Yeah, I mean, yeah. That's like AUD NZD. I don't think we've ever seen AUD NZD trend.
Yeah, nah, never.
Like it's been 3,000 days of range. Shout out to the people that trade this really terrible pair here. And you could even see me doing old school Wyckoff analysis on this that still has not played out because it's been so long. But yeah, nonetheless, like I don't know, that's what I see on USD CAD. But let's check in with the chat. Chat, how you feeling?
It's definitely interesting. And I want to give one more perspective on the dollar again, and then I'm gonna be finished talking about the dollar.
Go ahead, bro. Let me move over.
Hey.
And again, it's just to, give the counter side to what, my boy Kyle was saying, right? Because obviously Kyle was saying, from this perspective, because we're creating, these lower lows, lower highs on these smaller time frames, right? Which in retrospect, he's 100% right. We are creating these lower lows, lower highs, lower lows, lower highs, so on and so forth, right? So because of this, his opinion is that we are still bearish, right? But if we just go up to the higher time frame, right, we can use that same exact analogy, right? And say, okay, you know what has the market done on the monthly? All right, we have this low, high, low, high. We broke out the range, we created a higher high. And although, yeah, this thing could still push down, but technically we're still very much bullish here on the monthly, here on the dollar index. So again, it really is just relative to the time frame that you're looking at in terms of what your actual bias truly is. But if you really want to be honest, this thing has been bullish since 2008, 2009, so, and that's literally after the market crash, which is kind of interesting more than anything to see this thing actually go crazy.
I love that you brought this up, because it's just the
that.
manipulation of time frames and data to fit your bias. It's like you can go look at Bitcoin on the weekly and the monthly. It's never been bearish, ever.
And
It's never been bearish. It's never been long-term bearish ever. Bitcoin's never had 2 years back to back that it closed back to back down candles. Never in its entire history. So it's like you could say that it's never been bearish, but then you could also be like, well, it fell from 69K to 15. So it's like, just to some degree, there, again, bullish and bearish is just based off of the data you're choosing to consume.
Yeah, anybody can make a bias valid.
Yeah. I mean, obviously, like, you can't look at a monthly chart and be like, oh, it's bearish, because you're just going against logic at that point. But you could definitely manipulate time frames, even if it's on a 5-minute scale, to be like, oh, look, it's bearish, and it's,
Yeah, exactly. I mean, and even on this monthly, like, I don't know, I don't see nothing bearish whatsoever here. Like, even if this monthly ends up closing, like, oh my goodness, you guys are insane to not believe we're gonna go higher. Insane.
Yeah, we'll have to
like,
see how
even
it
if it
goes.
is,
I'll be
even if
taking
it
a
is
look at
bullish, like, even if it is bullish, like, is that a steep enough retracement for you, bro? Like, that's not even 50%.
I mean, again, I'm going based off what I'm seeing, right? Retesting structure. We just cleared the lows here on the monthly time frame, filled this imbalance, fair value gap, whatever you want to say. I mean, yeah, this could be a very valid spot where we do see the market react for sure off of.
I mean, we know that. We all looked for the bounce from 100, so I think we're in agreement with that.
Yeah,
It's just a matter of what kind of follow through you expect from that demand, and that's, I believe, where we differentiate. So again, you believe in more follow through. A few of us don't believe in as much follow through. It really just is going to depend on how it wants to react to that other inefficiency. Again, right up at that 10, where we all kind of agree where it will more than likely go, that 107, between 107 and 111 area, depending on how much, again, you believe that's going to fill in.
Yeah, and yeah, 100%. And I think if we do clear this previous month high, then we're at least going to come back and retest that 109, 110 level. And then, obviously, when we get up here, then obviously we got to see what the market is.
That would be
the different. I think the difference is, too, is like when we clear highs, you're taking any clear of a high as for what it is, which is like a market structure break. Whereas like market structure breaks for me, for me, it doesn't matter if something makes a new high if it doesn't make new high on more volume. So for like me, I have very specific rules about what I deem as like an actual valid market structure break. So like a true market structure trader will be like, okay, a new high has been formed, therefore this is a higher high. And it's like, well, it could be a higher high, but if there's no buying effort behind it for me, then it's not. Like, I don't really care. It's like, okay, cool. Like, it just took liquidity.
No,
so it's an interesting concept. Like, I don't think just because it breaks above that strictly means that there will be follow through. Because if the buying activity is not high above it, then it's probably just going to get erased.
No, I definitely get that. But for me, again, the reason why it's valid for me is staying with the trend.
Like, look at your MACD. Your MACD don't scream nothing bullish, to be honest.
Even the drop off. The drop off.
Your MACD is screaming, bro. Help me, please.
The MACD is screaming higher pressure. What you talk about? This volume
but
much
look
higher
at
than the previous one. Much higher.
Oh, is that how you use it? Okay, you're comparing it to there previously.
Yeah,
but look at like the current data that the MACD is giving for like this month though. It's like forming a bullish candle on like what is like it's struggling to even print a bar there.
Yeah, that's just because it's coming off of this last little selling pressure. But yeah, I mean, again, the MACD selling pressure is dropping while buying pressure is increasing.
Okay, interesting. That's how you. Okay, I wasn't even sure how you typically used it because again, like I've never even put MACD on my chart.
I mean,
for
even
like
if you look
longer
at
than
it
like a
on
day
the,
maybe.
even if we look at it on the daily time frame, right? Again, I didn't even bring it up, but this also just confirms what I'm looking at, right? Where was the most selling pressure on this
So you
sell-off
wouldn't, but
right
you
here,
wouldn't call that
right?
divergence though. The fact that you're creating more buying pressure, but you're not seeing a reaction from price, like there's no
Of
actual
course,
result from said pressure.
of course, there's divergence, right? There's always divergence in this, and I mean, we even have hidden divergence right here as well.
That's what I'm saying. That's what I'm
Yeah,
saying. Like you're getting more buying action, but
we
you're
have
not getting any actual result from it.
yeah, we have regular bullish divergence some from the downside, but we also have this hidden divergence shown as well. And I don't know, the way I interpret this, selling pressure is starting to slow down as buying volume is starting to pick up. Right. So that just leads me to think that we're going to really continue bullish as long as this buying volume continues. Right.
Interesting.
Yeah,
Yeah,
that's why
I think
I
we have.
like
I
the
think
MACD.
we have different opinions on that too. It's kind of
Oh
funny.
yeah. Oh yeah.
I
100%.
mean, I don't use the MACD, but the MACD is probably better to use in the DXY because you can't really get accurate. I mean, MACD is going off volume anyway, so it's like
Yeah,
the
it's very
data is,
similar.
unfortunately for the DXY specifically, guys, like you, especially for people that trade like me with Wyckoff logic and you guys use volume, be very careful trusting anything on any sort of like DXY or US dollar. Like again, it's already borderline questionable. A lot of Wyckoff traders will tell you volume doesn't matter because you can't get accurate volume for the Forex markets. That's even more true for like that's even more true for the DXY and the US dollar. That's even so it's again in my experience the information we do get on currency pairs is enough. I would say though on like stuff like this it's a little bit more questionable unless you're specifically paying for the data. If you're paying for it from a premium feed or a premium service, that's different. I know there's a few of you guys that do have paid subscriptions to more advanced price feeds, which if you take trading seriously, you guys should probably do. But but yeah, no,
Yeah.
definitely interesting conversation, bro. I mean, again, I don't specifically fully disagree with you, but I think we interpret things a little different, and
I
I'm
think
excited to see what happens because, like,
yeah,
whenever we have differences like this, I mean, again, we're only gonna grow more as a team,
that's a fact. It
and
leads
that's what
to
we've been doing for
education.
like 8 years now, and it's been a it's been a very good system. So,
Listen, iron
you know,
sharpens iron, man. It really
yeah,
does,
exactly. So whichever way it goes, you gotta best believe that the
and
outcome is
it's
gonna be more income.
and this is the great thing is I think for the most part, like we're all in agreement for the most part of what we think. I think it's just for me, I'm more so thinking long term bullishness, where you guys are thinking if we do come up, it's more so gonna
Yeah,
react and
we
go
we
bearish.
our sentiment changes at about the 108, 109 level.
Yeah, like
And
right up in
again,
here.
like I could very much agree with you once we get up there. It's like for me though, I can't fully commit to anything until I see what the volume levels are up there. If there's
Yeah.
significant buying happening and their sellers are just absent, I will logically have to change my bias. But
hmm I mean,
again, like
if I were
I
to, if I
have to
was,
I have to assume redistribution because we had a distribution and a markdown. It's like I
yeah,
can't bet on accumulation unless there was a clear spring, and there's just no clear spring. The 101
I
is a nice
mean,
liquidity grab, but it's an untested, untrue spring until we get that 102 below that 102 below that 101 wick. I can't make any assumptions on that.
yeah,
So
and I
you
mean,
consider that like a sweep of liquidity, Abel? Like,
oh yeah, I mean, it is. It's not that I
Yeah,
think about it.
it's
It
not.
is.
I don't think it's a question. I think it
It
is.
definitely is. 100% it is. Now, obviously, we didn't get like I know what Ray likes to see, right? The sweep of liquidity and then an immediate like real some type of real big shift, right? But still, it doesn't say that. What's to say that we still don't continue up and break that level,
Yeah, correct.
right?
Correct. It's
If our
just we haven't
price,
we haven't just because we haven't got there yet doesn't mean we won't get there at all.
yeah, price could very
all
well
right.
still
So
continue.
if you consider the lower sweep of liquidity, why don't you consider, since we're looking for weakness around this area, why don't you consider that supply zone also a sweep of liquidity?
This one right here.
Yes.
I mean, there is a relative sweep of liquidity on the inside right here. All of these levels for sure. But again, take into account, like, look at how, and there's a lot of things that I use in comparing, there's a lot of things that I use together, right? So I'm also looking at how choppy this is, right? Like, this is extremely, extremely choppy. This just looks like it wants to turn around, right? So just looking at how choppy price is, and you line that up with all of this level of structure, and you line up this grab of liquidity right at that level of structure, breaking key levels. I mean, this just to me looks like it wants to actually see something like that all day long.
Yeah, it's
That's
I mean, I think it's also fair to understand that Abel is also looking for it to go under 102. So it's like the supply zone that we're pulling off of now. Like, again, like we're all in agreement about what happens here. Like we're, you know.
If you guys want to know what my actual path is, right? It's just mine, right? Like my actual path for the dollar would be something like this, right? Like I would love to see this thing. Obviously, you know, we are at an area of supply, just like Ray mentioned, right? I'm not arguing that at all. I do think we are going to see a little reaction off of that, right? Probably come below this 102 level. But then from there, I'm expecting some more demand to come in right at this level down here to then go ahead and send us back above this 108. And then once we get above this 108, then obviously we could look for arguments to go ahead and want to sell off now, right? Because that could be an area to go ahead and start taking profits, you know, from the people that are buying from down here, right? But then again, I'm still going to be expecting continuations higher. So my path could be something like this here for the dollars, what I think can actually happen.
I think projecting anywhere past that 108 is just you get grayer and grayer, because like again, without the reaction at 108, we're kind of just guessing, like, and again, which is fine because we do a healthy amount of that. But
you know what's crazy is we don't even have to go up there. That's the thing, right? Like,
yeah, I mean there's that too.
There's a lot of what ifs.
Yeah, exactly. It's
like,
it's
we don't have
that's
to,
and that's the thing with projecting so far out is like you start to get into more and more gray areas and more things to consider.
Yeah.
And
it's too far out.
I mean, put it this way, guys, we're 11 days away from ISO going live, so. I don't know if you guys seen that, but Swift is adopting ISO 20022 at the beginning of March.
Yeah, that's interesting.
They put out a public statement. Bank of America put out some statements. I think JP Morgan put out some statements. So I'm just gonna
put it out there as well,
cough buy Algorand XRP XLM XDC or don't. But yeah,
just to put it out there, by the way, as well. Like I am the only one that's looking at it this way as well, right? So if I'm wrong, then cool, it's a learning lesson for me. You know, I'm able to take this stuff, all the information that has been said, you know, and just really start to, you know, see where I can personally improve on. You know, that's just how, you know, that's how traders supposed to be, right?
Yeah,
and that's why
I wish that was me though. I wish everybody disagreed with me.
Hey man, that's why I love
now,
it.
if you're right,
I know. I was going to say, if anything, that should be more confidence for you. That everybody.
And now, if I'm right though, again, it's a learning lesson for everybody else if they decide to take it that way. If not, then so.
Again, we'll play it day by day though. Let's chat. How y'all feeling? Listen, I know we've been on here a while. Let me know. How'd you guys like today's stream? Give me a rating, 1 out of 5. Right, one for you wish you hopped off 5 minutes in, which I feel for you.
Let me answer this question.
5 meaning you want us to go
if you think
hour.
it's fire and you honestly miss seeing us on here ranting back and forth.
Let's see.
But yeah, let
5
us know in
meaning
the
you
chat.
want way
give us
more.
A rating.
Let's see.
Give me a Michelin star rating.
Area.
If we get enough 5s, we'll stay on for another hour, eh?
No, that's not happening.
Excuse me? Nah, but seriously, if y'all are voting 5, this is what y'all need to go ahead and do. Y'all need to go ahead and go to the profitsociety.co and register for your premium account so you can be on our sessions Tuesdays through Thursdays on our 8 a.m. New York session, trading live with us, catching our trade setups live every single day during the week. Yeah. That's what you guys need to be doing.
Now, that's a great point, Kyle. Just to back up on that, if you guys are enjoying this conversation, family, we do this literally, I mean, pretty much a lot of the times when we're going live, right, for our premium community. So just keep that in mind. Right. But just to answer this question, right, because there are a few questions. Desmond, what could push the dollar to 108 area fundamentally? Well, I think a lot of the fundamental data that we just seen is why I'm leaning towards the dollar going bullish, which obviously I don't want to just continue going over it, right? Because we had a very long discussion at the beginning of the stream when I started speaking about a lot of the fundamentals, right? But there's just a lot of different things, you know, CPI, the way it came out, PPI, you know, NFP, the way it came out, you know, things like that, right? Is why I'm leaning towards, you know, that actually going up to that level for a fundamental reason. Let's see, what websites, resources can you share regarding fundamentals? I mean, fundamentals is one of those things, guys, that you really just got to go ahead and like start to do research, right? Like go to obviously investing.com, you know, go to our website, profitsociety.co.com. We have a free, you know, economic calendar there, right? And actually start to back test the data, right? Like actually see, you know, when news releases come out and see how the market reacts and responds to it. Now, that might be a little tricky as well because market conditions could be different from previous times, but it could give you an idea of how the market will react. another way that I personally learned is I started listening to other, analysts, right? Like actual real analysts that are doing this in real time, right? Whether it's on, the actual mainstream media, right? Or whether it's on YouTube channels, right? Of people that I know are very good with fundamentals. You actually got to just start listening and start applying, what is being said and start to form your own opinion. But you have to really start to think like an institution, right? Like if you were an institution and these market conditions are saying this, how are you going to react or respond, right? Are you going to feel confident to invest in the markets, or are you going to more so go towards the safe haven route, right? But you just got to put in the work and start really, for one, learning what the actual data means. A lot of people don't even know what GDP, CPI, PPI, NFP, right? All these 3-letter words or these 3-letter, acronyms really stand for, right? So you got to, for one, understand what the news really is, and from that, just go right to YouTube and type in GDP.
Actually, here, let me ask them a question. Family, on Wednesday we have FOMC meeting minutes, right? Drop a 1 in the chat if you guys have ever traded or watched the markets during FOMC minutes. Right, if you've ever partaken in the markets, took a look at the markets at 2 p.m. when the FOMC meeting minutes dropped. Right, let me know in the chat. Drop me a 1 in the chat. All right, let me know, because I have a follow-up question for you guys as well.
I'll be surprised if a few people do it.
I mean, I'm expecting most of them too, because I'm sure they see the red folder news. And they probably go in there and they probably, they probably want to trade. Some people probably don't want to admit it, but it's okay. Let's see. We got Vive Master, we got Desmond, we got Tammy, we got SBG, we got Rix. Let's see who else. Because I'm going to ask you guys a follow-up question, right? Let me see. Not that many people, surprisingly. Raha told me to put buy stops and sell stops. That is funny. Some people actually do that. I don't know if that was a joke or not, but some people actually do that.
Hey man, I'll say this: if it works for whoever,
yeah, it absolutely could work.
then so be it, man. I'm not one to try to shit on somebody's strategy.
Yeah, no, not at all. I mean, I know people that come out like that. I mean, I've done it as well.
I've tried it myself. It just didn't work.
Yeah, you gotta just understand the risk that comes with that, being slipped or being triggered on both sides with spread. Like, you gotta just take a couple things into account. But there are people that do that, and you could do it in ways that are pretty safe. All right, so listen, for the people that dropped the 1, how many of you guys have actually read the FOMC meeting minutes report? Because trading it at 2 p.m. and looking at the volatility is not the same thing as reading the report. Most of you guys don't even dive deep into any of this stuff. The Fed releases a report, you don't even open it. You don't even try to read it. Like, the jobs numbers come out, you've never even been on the U.S. Bureau of Labor website. Like, you've never even been on there. You've never been to the source of where CPI drops. Right? Like, you guys have to start taking these news events seriously. You need to actually show up, consume the data, see what Bloomberg's saying, go on Twitter, go on YouTube, consume all that. Most of you, again, you guys are trading, but you never even open up the reports. You don't even try. And it's like these words and things will not be familiar to you unless you do that. Right? Again, the way Abel and I learned fundamentals is literally through just trial and error.
Facts.
Right? We've been trading 8 years. Right? You guys know how many interest rates I've seen? I've seen tons. Right? Some of you guys have only seen like 5, 6, maybe 10. Maybe you've been trading longer, but you haven't been paying attention to it. It's like that's what matters. It's trial and error. And news events don't happen as frequently as trades, right? Like, you might be able to go through like 20 different case studies throughout a week of like different types of trades, but like you can't look at CPI 20 times in 1 week. It doesn't come out 20 times in 1 week. Yeah. Right? You can't look at interest rates 20 times in 1 week. It takes a longer time to get used to that. And then even then, the stuff you learn in your first year is not going to be applicable in the same ways the year 2 comes around. So it's going to take a while. I'll be honest with you guys. Fundamentals it's a process. It's a really annoying process.
What's crazy? Like, it took me probably, I would say, maybe a good 2-3 years to finally understand it the way that I understand it.
Yeah, I would agree with you. I'm in that same boat, bro.
Like, it takes time, guys. It's not just.
And there's some events too that you'll go through that you'll never go through again. Some of you guys don't even remember what it was like, or weren't even here when Brexit happened. Yeah. You think we knew what to do during Brexit?
Hell
Nobody knew
no.
what to do during Brexit. Even the
Hell
professionals
no.
didn't know what to do. They had to lower the leverage just to just because that's how unsure people were
That's a
about what was
fact.
going to happen. The only thing that they knew is the markets were going to be volatile, and that's
Mm-hmm.
because they were so unsure. So they knew that even they were going to be shaky on making stuff, making decisions and stuff.
That's a fact. And
So
keep in mind too, like market conditions change. Like
yeah,
again, like
greatly.
the way I would interpret the markets today is not how I would interpret it if we had 2% inflation, right? If things were different, I'll be looking at it a completely different way based on current market conditions.
Yep.
The way we look at the news today is not how we look at it 2-3 years ago before COVID. It completely changed.
Yeah,
And we
the
have to be able to
the
adjust.
NFP numbers this year and the NFP numbers in 2 years they can be the same number, but the market can take it two different ways just based on everything else going on.
Yeah, 100%. That's a fact.
And that's why you
Um,
see Abel and I have such differences on opinion, because again, like we're it's more of a, again, gray area, which is why, again, institutions pay people very well to research
mhm,
this stuff. That's why they have teams of people that do this,
mhm.
right? And that's why
That's a
we
fact.
have a team of people that look at things from multiple perspectives. If you think that the people that sit down at JP Morgan don't have disagreements about where they see the market going, then you might be a little confused on how stuff works. Trust me, not everybody at JP Morgan is like in agreement. they
That's a fact.
definitely are exploring every potential side of everything.
Hmm.
So I love it. I think tonight's stream was amazing. I think
That's a
there's a lot
fact.
of gems on here. I really think that
Yeah,
some of you guys should rewatch this, and
yeah, this was a fire
I feel
stream. I
like
ain't gonna lie.
even we will come back to this because
Hmm.
again, we did have some varying
Yeah,
opinions.
I will say this in the chat too, right? Because and it doesn't really have to do with trading, but it has to do with throwing other traders' names in the chat. Let's not do that. All right. I get it. You guys want our thoughts and opinions on other traders, but one thing we're not going to do is try to, talk about other traders. We're focused on ourselves, focus on our company and our brand, and continuously grow that. Shout out to Raja. He's doing his thing. Shout out to whoever else you guys talking about. But let's keep those type of conversations, guys, outside of the chat. Let's focus on what we're doing here. There's no reason to try to bring up other traders, to try to bring up discussions or controversy. That's not what we're doing here, right? We're not for that. We're just focused on ourselves. We're focused on our brand and our business more than anything.
Yeah, as a
So I just,
fact, I really don't care what any other trader is doing.
nah, shout out to all of them, but we don't give a
Yeah,
fuck about what they're
exactly.
doing.
I wish everybody the most success, but I can only focus on me, man. The
That's a
second I
fact.
focus on anybody else, it just takes away from what I'm doing. So there's just no
Yeah,
reason. And I
yeah.
advise you guys do the same thing. Like, listen, like you guys want to, tune into whoever you want to tune into, whether it's us or anybody. But again, we are in the business of showing you guys how to think for yourselves. So even you can grow even beyond us and have your own opinions and instead of listening to us, you'll actually be conversing with us and again, being a part of these debates. So,
And
but
shout out to you
good
guys that
point,
are a
bro.
part of it too.
It's definitely keep that stuff out of the chat because
Yeah, man.
there's no
And
need
I
for
get
it.
it. It's YouTube, man. Like people love controversy, but that's not one thing that we're not gonna get, tricked into try to talk about other traders. That's not our thing,
Yeah,
family.
it ain't
Like
gonna
at
pay
all.
us. The markets
Hell,
pay me enough.
I don't know. Yeah, we're not worried about that at all.
But yeah, listen, family. Stream was great. We're definitely on here for much longer than we usually are. I know since we launched the premium, we're not on here as much. We'll try to get a lot better with that, dropping you guys, value even outside of the premium communities. But yeah, we love and appreciate y'all. We will see you guys on the inside in the live trade rooms. As always, this is your boy Skag on behalf of Profit Society, showing you guys love and appreciation, and we will see you guys later in the week. Enjoy your night, family.